gas. We drive by the Hess gas station. I'd be like, Dad, the truck's over there. And he'd be like, we got to save a penny and a half. I never had.
Is that what you say to your son, Noi? We got to save a buck?
About the bills.
No, I don't drive. That was a solution. I lost my driver's license. Carl Weinberg joins us right now. He had a Hess oil truck, and he joins us from High Frequency Economics today. Carl, I want to get a summation of everything on this global economy and the level of uncertainty. What is the character of our higher interest rates? Your High Frequency Economics is interest rate analysis forward. What does this new 5% yield mean?
Well, to the economy, I don't think it really means very much. I was amused by Lisa's comment a few seconds ago. Lisa, you're excited about the rise in bond yields over the last few weeks. I wonder where you were back in 1980 and 1981 when rates were rising by 1 or 2 percentage points every Fed meeting at the short end, and bond yields were rising at a percentage point a week at one period in time. All right, that was real tightening, and that was the kind of tightening that punishes an economy. But moving to where we are right now, at 5%, we're only 3 percentage points above the inflation target. We're only a percentage point or so above current inflation. Right? This is not punitively restrictive economic policy. We don't have to be afraid of real interest rates at this level. We have to adapt to them both in financial markets and in the real economy. But at the end of the day, right, as we adjust to higher levels of interest rates, yeah, we'll see a little bit less housing activity as people get over sticker shock on mortgages and so forth. But as long as the real economy continues to grow, we can afford interest rates at this level.
So, Carl, are you saying that right now we could see the U.S. avoid recession? We could end up seeing GDP come in strongly at more than 4% in the third quarter and still maintain these interest rates and get down to 2% inflation?
So what I'm saying, Lisa, is I'm not saying there's not going to be a recession. Inevitably, there will be a recession. But what I'm saying is that the current rise that we're seeing in interest rates and yields is probably not going to be what causes it. I don't know what's going to cause it. All right. But, all right, where we are right now, we've seen in the past, prior to the financial crisis, we have had real interest rates as high as or higher than they are right now. And the economy grew beautifully. Interest rates are higher right now. I would say they're higher, but they're not high. I'd say we're getting back to normal levels of real interest rates. If you look at the period from 1987 to 2007, the 20 years prior to the global financial crisis, 10-year bond yields averaged 3.2 percentage points above current inflation during that period. So where we are right now is kid stuff compared to where we were back in that 20-year period when we did see recessions, but we also did see periods of strong economic growth.
Although we do have an entire asset system that has been built up over an era of zero rates, which raises a question of the vulnerabilities that have been embedded in all sorts of capital structures that are hinged on zero rate policies, suddenly having to face off with reality, as you pointed out. How concerned are you about some of the anecdotal data that people are pointing to, including Fed officials, that show a pretty rapid pace of weakening that people are expecting in the fourth quarter?
Well, we are expecting a slowdown of the economy in the fourth quarter, but from a very vigorous third quarter, as one should expect. The rate of growth that we're going to print, our third quarter GDP, is going to be much higher than normal, much higher than we should have expected, an outlier compared to normal trends. But we're forecasting continued trend economic growth around 1.6% with the economy at full employment as we move forward into the end of this year and the beginning of next year. And being at full employment is both a blessing and a gift. Right? When I was a kid economist, the goal of the economic system used to be to get a job for everybody, you know, a chicken in every pot and all of that stuff. Everybody who wants a job right now has one. That's good. And prices are returning to normal rates of increase after a one-time shock to the money supply. That's good. The problem that we have is if we try to push past the levels of full employment, and that could happen, say, in a war scenario where we're fighting a war on two fronts at the same time, in a scenario where we want to produce more guns and less butter. And how do you do that when you're already at full employment? And the answer is you have to have less butter to make more guns, and that means a shortage of supply of butter, of consumer goods, and perhaps the next wave of price increases will come out of our wartime scenario. But the prices... Yeah, go
Carl, let's just pause for thought there. You said we were at kid stuff level in terms of rates. I can only go back as far as 15% in the UK in 1989. That was a few years ago. But if you say we're at kid stuff now, then is the bond market not doing enough of the dirty work for the Fed? Do you think there's much more pain to come in this bond market and this rates market?
Well, the bond market is helping the Fed slow the economy. And if that's the right thing to do, then the bond market is being helpful. I'm not so sure that we need to slow the economy in order to regain price stability. I think that the economy will go back to stable prices as we erode away this big bulge of money that was put into the economy during the pandemic, for good reason, mind you, but with consequences. But I don't think that we necessarily have to have a recession in order to get price stability. I think we're headed very clearly back toward price stability now without a recession, and I think that's great too. Again, everybody's wants a job, has a job. To me, that's an A+ for the economy.
Carl Weinberg, thank you so much, with High Frequency Economics. And into the central bank meetings, Lisa. I mean, this is Dr. Weinberg goes to the heart of the matter is smart people like him are waiting around for labor to crack, and labor hasn't cracked.
Which he says is basically that this is the story, that basically there's going to be strength and that rates are not going to be what cracks it. At a certain point, though, you start seeing all these companies talk about efficiencies. I think about the deal right now with Chevron and Hess.
Right.
How much are there going to be redundancies and the layoffs that eventually will ensue? Is that the next sort of leg to drop that people are looking at?
So, I said to Manus, and, I said, I really ought to look at Irish real estate, which was the most significant gasp I've had in the last 6 months. Manus, it's a boom economy, but to America and to the United Kingdom as well. To me, it's starkly in Ireland, the haves and the have-nots. And there's a whole part of the economy not participating.
That has been time immemorial in the Republic of Ireland.
But worse now?
No, I mean, wealth disparity is growing around the world. The Fed released a report over the week on Friday, which talked about wealth in this country, and it has been the biggest accumulation of wealth in 30 years in the United States of America. Going back to Ireland, buy Northern Ireland property. That's the call, Tom. I missed the boat in Dubai. I missed it in Northern Ireland, and I'm not taking a mortgage at 8% here.
Is Bono Bono of U2, is he
He's got a few houses out in the beautiful part of the south of the city.
It's such a value add having Manus Cranning with us.
Oh, I feel like apologizing to him. It's basically like you sort of listen to an accent and then you're like, oh,
he's different.
Real estate in whatever country you're from.
No, it's ridiculous. Dublin.
I've missed 2 boats.
Dublin real estate is absolutely ridiculous.
Where else are you looking?
It's like Oslo, China Oil, I'm Chevron, Amrita Sen, Energy Aspects. Stay with us.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
unpack what's happening right now, you have Russia's invasion of Ukraine, again, that's drifting into the second year. You have U.S.-China issues that continue. You've now got this crisis in the Middle East with the attack on Israel on October 7th and the associated response. All of these are connected, and the common theme is the energy market in terms of looking at who's buying what from where and how to manage some of the domestic expectations.
Who's buying what from where? Maybe it has to do with the oil mergers we're seeing. We want to inform you with guests, expert in their fields. Daniel Tannenbaum with us, global anti-financial crime practice leader at Oliver Wyman, truly expert on sanctions that work and sanctions that do not. We welcome all of you. John Farrow on sabbatical. Menace Cranny has pulled the short straw and is with us. This one we're begging for Danny Berger tomorrow to give us a step up.
A bit of glamour.
Bit of glamour here, other than what we get from M. Cranny. But Lisa, as we get into this important conversation with oil, it is Merger Monday.
Well, and the idea that you've got Chevron buying Hess after you already saw Exxon with what we saw with the shale patch and the Pioneer. Why? Why now, right? Is it efficiencies of scale? Is it because suddenly the U.S. is looking out and saying, we got to compete so that we can really cash in before fossil fuels are a little bit, maybe, more obsolete, maybe?
Let's get right to it. Your definitive brief here on this transaction, $60 billion of a total enterprise value. Amrita Sen, expert at the micro foundations of the price of oil, and also expert out of the geography of oil. Amrita, I was up to speed on this in a FACO way, and I'm getting up to speed quickly. Guyana, 2015, Exxon finds more oil than God in the Gulf of Mexico off of South America. This is Hess, and this is a Guyana acquisition by Mr. Worth and Chevron. Explain to our audience the magnitude of the Guyana oil fields.
I think it's a fantastic acquisition, if you ask me, given the fact that Guyana is actually going to be the most prolific non-OPEC supply growth in the coming years. Exxon, like you said, already has footprint, and as does Hess. So Chevron now, through Hess, gets exposure to that. Guyana's production has been growing by 200,000 to 300,000 barrels per day. It's got several new FPSOs planned in the coming years. We're talking about production breaching 1 million barrels per day and continuing to grow. So it is, like I said, the most promising non-OPEC supply prospect. We've had Brazil take that position for the last few years, and that's now flipped to Guyana. So again, in that sense, a fantastic acquisition.
What is the distinction of Guyana? And then I believe it is too, I got to get my map out, Manus, I'm going down in flames here. What is the distinction between Guyana and Venezuela on the southern side of the Caribbean?
I mean, of course, there's political stability for one, and the quality of oil. The quality of oil Guyana produces is actually very good quality. It's sweeter. It's really liked by even European refiners who sometimes struggle to process a lot of the heavier sour barrels. Venezuelan oil is very, very heavy oil. It's liked by a lot of refiners, like in the U.S. Gulf Coast, that have the capacity to process that. It requires what you call cokers, but not every refiner has that. So Guyana's oil is actually easier to process in that sense. Of course, in today's day and age, though, because we have a lot of refineries around the world who need that heavy oil, the lifting of sanctions on Venezuela would actually be welcome, of course, if that is to be sustained and if there are free and fair elections. And again, there are lots of question marks around that.
Amrita, surveillance correction here. Guyana to the east of Venezuela by 600 miles between Caracas and Georgetown.
Thank you.
Nailing that. One of our interns just saved me on that.
We're not going to fly with you, are we?
Well, Amrita, there's a question. Why are we seeing so many of these acquisitions right now in the oil patch?
I mean, this is something our team, our U.S. upstream team has been pointing out since July. We actually identified 80 companies that we thought was up for grabs. I'll happily share that list with you guys. And I think of that, about 17, 18 have already happened. This is, if you think about the shale patch of the last decade, it was fueled by zero interest rates, and it was fueled by focusing on not shareholder growth or cash flow, but it was all about production growth. So it didn't matter whether you made money or not, just come, pump, and produce as much oil. That's changed now. Over the last few years, we've seen actually shareholders say, no, you actually need to return money to us, which means a lot of the acreage and a lot of the companies that had poor acreage just produced anyways, they have to get basically integrated with bigger companies who have economies of scale, because that's the only way you can generate cash. So that's the main reason why we are seeing this. And then, of course, as interest rates go up, servicing a lot of these debts that they have, a lot of the companies have very, very high debts, just isn't feasible. And that's why you will continue to see consolidation. We think this is just the start, and we're going to see a lot more going forward.
So, Amrita, how much is this also a result of maybe antitrust agents in the U.S. looking more favorably on some of these tie-ups because there is this goal to offset some of the supply fluctuations in the Middle East?
I mean, look, I think that's at the margin, right? If you think about the kind of deals being done, or look at the deals being done, it started with Occidental back, not this year, but previously. It's always about getting the acreage which is right next to yours so that you can have economies of scale. And I think that's the underlying reason for that. And of course, even with these acquisitions, it doesn't necessarily mean you're going to get more production. More often than not, 1+1 rigs is giving us 1.2 rigs, not 2, because a lot of the rigs, like I was saying earlier, is actually poor quality. So the bigger company is simply saying, we're not going to produce from here, and therefore overall production actually goes down. Exxon and Pioneer are the exception there. Every other M&A we've seen actually is leading to lowering overall guidance of the two companies rather than raising it.
Amrita, good to see you this morning. Does any of this deal making that you see go through reflect anticipation of a change or a material change in U.S. energy policy? We're coming, I don't know whether we're coming to the end of a Biden administration, but we're going into an election year. Policy may change. America, oil independence is key. Any of the political aspects play into the potential for deal making?
I don't think so, in the sense, again, these are kind of company-specific deals that we're talking about. I think the bigger challenge, of course, we have is, I mean, look, the U.S. is producing above 13 million barrels per day, which is a record high anyways, and U.S. production continues to grow. Of course, the challenge I was saying is that you do have sanctions being lifted on Venezuela, even though elections haven't been held and there are still bans on the opposition candidate. That raises more questions around the shale oil guys and saying, why are we not being given the opportunity to produce even more, rather than you going and doing deals elsewhere?
Amrita, I'll see you in a month's time in Vienna. There is an official video of Amrita and I dancing in OPEC during COVID, going toe-to-toe.
See the life.
Dancing.
Yeah,
we are so sheltered.
Living the life in Vienna. Quick question on Vienna as we go to Vienna. The theory is this, that the U.S. goes to refill the SPR over the next couple of months, gives Saudi and Russia some kind of caveat to release some of the unilateral cuts. Is that pie in the sky, hopeful thinking? What is your anticipation as we go to Vienna?
Do not buy that.
You don't buy that?
Do not buy that. I do not buy that. I think Saudi Arabia has been very clear in saying they're keeping the cuts in place because of the macroeconomic concerns. Look, the U.S. has said this before as well, that, oh, we're going to buy it when it was kind of, less than $80, and they didn't. They've only managed to refill 4.8 million barrels, and they've come out and said, oh, we'll buy the oil when it's, 79. Or I don't think they're going to get there.
Amrita Sen, thank you so much. And on behalf of John Farrell and Lisa, Team Surveillance really looks forward to interviewing you in Vienna here at the next Cranny soiree. What happens in Vienna? This is where OPEC meets for 7 minutes.
When it's springtime in Vienna, but it's going to be wintertime.
No, I've never heard anyone sing on this show before.
There's a first.
Edelweiss. Okay, thank you. What seriously happens in Vienna besides a 3-day Cranny junket?
Well, first of all, it's not a junket to senior management. It's not a junket. But there is a great deal of chasing around. You chase these ministers through hallways in the Kempinski. Anne-Marie Horden wreaks havoc at the Kempinski. She breaks vases.
Yeah, she breaks nails.
But there is a lot of background and back channeling that goes on. And indeed, we'll see what the Saudis and the Russians come with in November.
A number of stories today to look at, and leading the way without question is a 10-year yield of 5.00%. Lisa, what are we waiting for? I'm waiting for the benchmark bank rate 30-year pricing, and I'm waiting to get a first pricing on the Bloomberg terminal of the real yield. There it is right now, up 9 basis points, 2.53% on the inflation-adjusted yield. You tell me how business gets done.
Well, you tell me how that resets some of the equity valuations. That is the highest going back to November 2008.
Extraordinary. Please stay with us here. Michael McKee on the economy. Much more to come. General Frank McKenzie will join us, and Wei Li of BlackRock. Good morning.
Of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City,
From London and Sydney.
from Washington,
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
This is a time for humility in multi-asset investing.
We're likely to see the lagged effects of policy tightening and a growth slowdown.
We're definitely having a reset to a higher actual return environment.
This economy has a huge mosaic of factors that are inputs to what's happening in the overall market.
That's what we're seeing now. Challenge in the bond market, success in the equity market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene from New York, on radio, on television. Many narratives on this Monday as well. One of them is John Farrow on assignment. Manus Cranny sitting in today, adding huge value, particularly off Chevron Hess, with his years in Dubai and, of course, all in the Eastern Mediterranean. In this hour, Amory Horton will join us, as well as Oliver Crook here on the Eastern Mediterranean. But we've got to go to the markets, Lisa, this morning, in the hallmark with Wei Li coming on in moments from BlackRock, a 5% 10-year yield.
Which a lot of people thought was unimaginable just 6 months ago. People
I was in
laughed
that camp.
people
I
out
was
of the
in
room
that
when they
camp.
said 5%. Now you have people gaming out 6%, and people don't understand what's behind it at a time where there's otherwise a risk-off feel in the market. That, to me, is the most interesting aspect, given that it is no longer maybe the haven status that it used to be.
Publishing moments ago, 2.53% on the real 10-year yield at 180. I said, maybe it'll get to 200, and now we're out at 253. There's convexity there. There's acceleration.
A lot of people said 6 months ago, back when everybody laughed about 5% nominal yields, that if we got to 2.5% real yields, that would torpedo all equity valuations. It would be it. Year over. And yet that hasn't been the case in any way, shape, or form, and that has been one of the biggest surprises.
Go ahead, man.
The question is, as you go into the dying 2 months of the year, do you turn into a duration hero? Do you jump in? Do you actually take bonds on here and believe that this is the top? Or does this market test out 525, 550 and look for more term premium, Tom?
Well, what do you do if you're in England? John Farrow, you remember him? He was here last week. John Farrow, noticing the convexity of the 30-year gilt was more abrupt than even the U.S. The speed of a higher yield in the United Kingdom gives pause, doesn't it?
Well, the risk is you saw how bond market completely imploded in the United Kingdom a year ago. I understand that was trustonomics. I'm not making that kind of delusional call. But the issue is this. You've got supply. You've got many issues. Dysfunctional Washington, huge supply. You've got big issues on the bond market.
We're so busy now. We're going to get to the data check so Lisa can give you a cacophony of a brief this morning with the narratives going on. How about the VIX? Forget about 20. We're out to 22.58 with a one-stick move on the VIX showing some real tension finally in the market. Futures at negative 23. In the bond market, we've been discussing 512 on the 2-year yield. You can do the math on a 5% 10-year. That gets you to a 210 vanilla spread of 12 shocking basis points. This week, will we see true and complete disinversion? On Brent crude, $92 a barrel. West Texas Intermediate, $87 a barrel. There's a modest merger in the oil patch. We'll discuss that. Dollar flat. Yen did print 150 for a cup of coffee, 149.96 right now. Euro back to a 106. I don't know what any of that means. Loonie, 137. Good morning, Canada as well. Saving me the Bramo brief.
Well, we talked this morning, Larry Adams mentioned, the economy is not the stock market. And this week, we're getting 30% of the S&P reporting earnings, about $15 trillion of market cap. Microsoft, Alphabet, those tomorrow. Meta Wednesday, Amazon on Thursday. The gains of these shares have driven the entire gain on the S&P 500, led by Meta, up 156% so far this year. To me, the question is, how much do they really have a high bar to cross with forward-looking guidance? And if they miss, is that sort of going to be a significant risk factor for a market that's kind of hanging in there, but kind of breaking down on the margins?
So the theory should be at 5, let's call it 5.25 for a bandwidth on bonds, because markets like to overreach and test new levels. We're in a new zone. We're above 5%. So in theory, your growth stock should, in theory, come under pressure. However, the saving grace of the names that you've just mentioned, and this is digging deep into this sort of memory of 2 weeks ago, is the balance sheets, the cash on those balance sheets. You're right. I think general growth will be tested, but I think some of those mega cap 7s will be resilient because of the balance sheets.
Talking about balance sheets, we also have central banks reporting earnings this week. I'm actually very curious about balance sheet decisions. Bank of Canada Wednesday, ECB on Thursday, not expecting a big move there, and yet we do see rates staying where they are on the 2-year, longer term, in Europe for a longer period of time. And this week's economic data, to me, this is something you've been mentioning a lot, Tom, which is the GDP and how much it's re-accelerating. And third quarter GDP is going to come out on Thursday, along with personal consumption and core PCE. And is it going to show that re-acceleration that the Atlanta Fed GDP now shows at 5.4% currently?
I'm so glad you brought this up, folks. This is a reframe out to what some people are saying is 5% real GDP, which I'm going to round out to 8% nominal GDP. It may be a little lighter than that, but these are stunning numbers for the pundits looking back 6 months.
And this is the reason why some people are wondering, is this growth incompatible with getting down to 2% inflation? And is this growth really what's behind yields on the 10-year at 5%, Tom?
Right now, we're going to begin here, Manus Cranny, Lisa Abramowitz, and Tom Keene with our definitive call in the day on global fixed income. Wei Li, is Global Chief Investment Strategist at BlackRock, prodigious in mathematics, and joins us here on our fears of price down and yield up. Whaley, thank you so much for finding the time. Where is the bid on bonds? To me, the bid is walked away. Is that true? Is there just a dearth of bid across all of fixed income?
There are lots of moving parts right now. Good morning, everyone. In terms of our view on long bonds, long duration, we have been underweight U.S. long duration for 3 years now, since late 2020, when 10-year yields was below 1%. And last week, we closed the underweight to get to neutral. There are a couple of moving parts in terms of why rates have repriced so very meaningfully. The first piece is policy path repricing, and the second piece is term premium repricing, and within that, inflation premium is part of term premium. So where we are now with 10-year yields testing 5%, in our assessment, policy path is not that different from where we think it should be. But term premium, depending on which measure you use, we're looking at somewhere between 20 basis point, 40 basis point, different methodology, actually could push even higher over the strategic horizon. So we're talking about term premium over the strategic horizon at 100 basis points, not out of this world because of fiscal imbalance, because of issuance dynamics, because of higher rate environment, rate volatility, as well as because of higher inflationary environment. So when you bring all of that together, strategically we're still underweight, but tactically we're now neutral because risks have now become more balanced. And when we think about kind of the read across of rate repricing to risk assets, actually policy path repricing can be negative for equities because it impacts the discount rates directly. But term premium repricing doesn't have to be negative for equities because it's more an assessment of the relative appeal of duration in portfolios.
Do you think, Wei, I know that you've been leaning into the whole AI discussion and the whole AI thesis, and that's been driving some of your equity bets. Do you think that that area is completely immune to term premia and these discussions of yields, given the cash cows that they've become?
Well, what has been very interesting with regards to this mega tech and AI theme is that on the one hand, they benefit from the growth upgrades, earnings upgrades that we're seeing coming through. So for example, next year, 10% EPS forecast for S&P 500. Half of that is driven by mega tech names, right? 5% is coming from the tech names. So they're definitely benefiting from earnings upgrades, which we pay a lot of attention to. But at the same time, they are more long duration compared with the broader equity market. So when rate reprices, it pressures down on long duration a little bit more, everything else being equal. But when you bring the two factors together, actually the growth prospect and the AI theme gathering momentum and the earnings upgrades actually trump the duration sensitivity, as we have seen so far earlier in the year, but also in recent periods of rate repricing. Actually, the AI theme, the NASDAQ, have been holding up better than you would have expected given the rate volatility.
Whaley, good morning. Just to carry on from that, this week they're going to see $16 trillion worth of equity reports, and part of the Magnificent Seven of tech are going to be in there. What Tom, Lisa, and myself, what we're talking about was the balance sheets, the cash on the balance sheets, the cash on Apple's balance sheet, the cash on the other big tech. Is that another defensive hallmark and a reason to endure and stay long big tech?
That is why we are still overweight the big tech and AI theme, because when we think about kind of quality characteristics as growth slows down, reacts to the tightening environment that we're all experiencing, actually having cash on your balance sheet and not being as geared up in this environment is a definite plus. And more broadly, we're talking about kind of the impression of the earnings season, that the feeling is that it's holding up better, but actually not forget the broader backdrop, which is the earnings. Actually, the 3 quarters have been stagnating, and we're just talking about incremental rebound from the stagnating backdrop. So that's the big picture here.
Whaley, Lawrence from New York emails in and says, ask Whaley if an institutional firm marks to market and everything else is on the balance sheet and the rationalization is I can own it forever and I'll get paid back eventually, baloney. How do you do the math on the midpoint of where the stuff you hold on the balance sheet gets a valuation? If I've got 8 years of maturity, how close is it to where you get a tipping point where you've got to confront what's on the balance sheet?
Well, first, say hello to Lawrence, and second, yes, indeed, we have to see more repricing of risk assets reflecting the higher rate environment. We look at duration, we're kind of almost there, which is why tactically we turned neutral. But if you look at equities, it has yet to reflect the higher rate environment by our very simple kind of arithmetic, kind of very simple back of the envelope analysis. You know, like further 5% to 10% adjustment is not, unthinkable. And then you think about private markets, there is also further repricing to go, which is why greater dispersion, greater selectivity is really warranted as we think about kind of deploying your risk budget in this environment, because there is a different rate sensitivity across risk spectrum, which is why we're very selective when it comes to equities. We're focusing on sectors that are growing earnings, but also very selective in terms of the private market. We like private credit, we like infrastructure debt, all these parts of private markets that benefiting from secular tailwinds.
I don't hear full faith and credit there. Wei Li, thank you so much. Of BlackRock. On this Monday morning, markets on the move in sales, futures, negative 23, down 0.5%.
You know, as Wei Li was talking, she was focusing on outside of the mega tech and what might happen to them and the additional repricing that might be required in response to yields. I don't think we're talking enough about regional banks. They're almost back down to where they were during the March sell-off. I mean, this to me, really, I was highlighting this last week. The KBX index is down dramatically. It's less than 10% away from the low that we saw back in March. And Manus, I mean, to that point, are we starting to see the signs of something deeper starting that is sort of masked by some of the big tech? And I mean, I keep thinking about this as we head into earnings season.
Well, we're obsessed, aren't we? We are obsessed about bonds. We're obsessed about bond yields. We're obsessed about inflation data. And sometimes the flow of money is when we take our eye off the ball. And the risk is, of course, that we do see an additional move of cash out of those banks. Maybe that is where the next crack does come to bear on the market. The consumer is fine. The consumer's grand. So where is the next inflection point?
I think part of the consumer's gland. I really don't, I know retail sales were a bang-up statistic and jobs, but when someone says the American consumer's grand, I'm looking at delinquencies on some loans. I'm going,
well, the delinquencies on the autos, on the subprime autos, is ratcheting higher.
Yeah,
to be fair,
the Bentley's paid for it. Let's continue here. Futures negative 21, Dow futures -1. John from an island with an umbrella in his Bloody Mary says, "Quote the Dow, 33,000 on the Dow." Good morning.
Thank you.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the U.S.
Nobody covers business like Bloomberg. Context changes everything. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything. Today, Bloomberg's Guy Johnson and Alex Steele sit down for an exclusive interview with Virgin Atlantic CEO Shai Weiss and Delta CEO Ed Bastian. The health of airline companies, the future of business travel, and headwinds facing the industry. Tune in today at 11:30 a.m. Eastern, 4:30 p.m. London time on Bloomberg Television. Context changes everything.
We're concerned about potential escalation. In fact, what we're seeing is the prospect of a significant escalation of attacks on our troops and our people throughout the region. We're going to do what's necessary to make sure that our troops are in the good position.
He is the 12th commander of the Central Command with real war experience, our Secretary of Defense, Lloyd Austin, there on ABC over the weekend with carefully phrased words about Americans in harm's way in the Eastern Mediterranean. We welcome all of you this morning to New York on radio and television. Manus Cranny in for John Farrell. Lisa Abramowitz and Tom Keene. Yes, we're looking at different narratives. We've got a massive oil merger. We've got yields on the move. Futures at -21, the VIX out to the VIX has finally moved. Forget about 1918. We've got some real tension in the market, 22.54 on the VIX. We now step into a discussion here linking Washington with Tel Aviv. Oliver Crook is in Tel Aviv, and joining us from Washington, our chief Washington correspondent, Anne-Marie Horton, this morning. Anne-Marie, with all good cheer, did the President of the United States survive the weekend? How does Mr. Biden start the week?
He certainly did survive the weekend. I know there was some concerns because he was in Delaware at his home and not at the White House, but the president took a number of calls over the weekend. Benjamin Netanyahu he was in contact with, as well as a call with the likes of Trudeau, Macron, Meloni of Italy, Rishi Sunak of the United Kingdom. Really this Western alliance talking about how they could one, they want to make sure that they are all on the same page, that Israel has the right to defend itself against Hamas, but also they want to make sure that this conflict is contained and that there is not a wider regional conflict that spreads because of this. The president even caught up with the Pope over the weekend. So he survived the weekend and he goes into an incredibly challenging week, given the fact that there are still Americans held by Hamas hostage.
I mean, Lisa wants to get in here, but Anne-Marie Horton, quickly, I don't buy for a minute that Israel is beholden to, quote, the Western alliance. I just don't buy it for a minute. How alone, how unilateral, how specific is the Israeli military on this Monday afternoon?
Well, I would say, and we had reporting, including my own from Friday, that has developed in other outlets over the weekend, that there has been a push from the likes of the United States and others to try to slow down Israel's ground invasion, to make sure that it is precise, and also to make sure that they can do all the work they can to get hostages out before Israel goes in. And one thing that has been pressed upon Benjamin Netanyahu and the Israeli military is to make sure that at all costs that you can, that innocent Palestinian lives are not put in harm's way. And already we've seen that that is not possible at all times. So that is something that the U.S. for sure is exerting a lot of pressure on. And also you can see just with this flurry of diplomacy in and out of Tel Aviv and Jerusalem. I'm sure Oliver can speak to this. Today, you have Greece's Mitsotakis going. Tomorrow, you have Emmanuel Macron. There's a CODEL right now. There's a number of senators that are there. They are keeping up this constant diplomacy, and potentially that helps push a ground invasion further down the timeline.
And Ali, to that point, there's a question of how to understand then the bombing of Aleppo's airports and how to understand some of the strikes on certain Hezbollah targets in terms of trying to prevent escalation at this point.
Completely, but again, what the IDF will say is that there are continued rocket fires and skirmishes in the north, and so of course now the Israelis have continued to bomb, and you see it more and more. I mean, we have alerts from the IDF that say a lot of what they have done overnight, and more you're seeing, yes, Gaza, but you see more and more Hezbollah targets in the north of Lebanon, and of course that follows also the evacuation of tens of thousands of Israeli civilians that live there up in the border. I mean, just having been living in the hotel where I've been for the last 2 weeks, at first I met a number of people there who were evacuated from the south. Now, speaking to the management of the hotel and the people there, it's people that are being evacuated from the north. So even here, some 80 miles from the Lebanese border, you're seeing the impacts.
Anne-Marie, from your vantage point, how much support does Iran have from some of the regional players versus their isolation at this moment?
I mean, Iran is incredibly isolated in the Gulf when you look at the big regional players like the United Arab Emirates and Saudi Arabia. Remember, for Riyadh, for Abu Dhabi, proxy groups in the Gulf, Iranian-backed proxy groups in the Gulf that start trouble is not new. The Houthis, there's a tremendous amount of skirmishes and missiles that have flied over Jeddah and Dammam from the Houthis, as well as in early 2022, a fire in the airport in the United Arab Emirates because of these Houthi missiles. This is why there is so much concern in the region, because it's not just their concern about Hamas. It's Lebanese Hezbollah in the north, and it's the Houthis as well, which last week we did see a U.S. destroyer intercept missiles coming from Houthis in Yemen, and the Pentagon said likely that was headed towards Israel.
Well, the U.S., Anne-Marie, obviously over the weekend has upped the defense. There's another war carrier going to the eastern Mediterranean, and some troops have been put on alert specifically on that risk of escalation on a number of fronts. Oliver, let's bring it back to you. The ground assault did not happen as many had thought over the weekend. What has structurally changed about the landscape for war of Israel on Gaza?
Well, two things have changed structurally, which are two precedents were set, which is one, hostages were released, and two, aid was allowed to flow in. And we're hearing again from, this is from Egyptian media, again, it's very difficult to get a read on what's going on in Rafah, but we understand, according to Egyptian media, that you have additional trucks that are now flowing right now today into Gaza to give some of that aid through. So again, this is seen as the beginning of something important, but again, both from the hostage side is not going to be enough for the Israelis, and for the Americans. And aid, it's the same thing. 100 trucks a day is what the UN is calling for. And again, when we're thinking about all the pressure points and modes of escalation, we hear from the Arab community over the weekend from that summit, Manis, that you were closely following, the King of Jordan, saying that the message that they're hearing from the West is that the Palestinian lives do not matter as much as Israeli lives. These are all the things that are going to go into this very combustible situation. And I should also mention that just a couple hours ago, the IDF is screening huge volumes of footage that they pulled off of Hamas body cams that they're showing to journalists, which is going to be released. And again, this is all part of the temperature conversation and the reaction conversation.
Oliver Crook out in front of the story in Tel Aviv. Anne-Marie Horton, thank you so much in Washington. Balance of Power tonight will consider the issues of the Eastern Mediterranean. We consider adjustment in the market, 30-year bond, 5.15%, the history of a 5-year yield back to 2007 and maybe back to 1992. Torsten Slok at Apollo on the reality. We mentioned the real yield before, 2.52%. Torsten Slok and NFIB, Lisa, seeing 10% short-term loans.
10% rates for small businesses. And that's the key here. And what we've been talking about is maybe the legacy of this moment is going to be the divergence between the big and small. Maybe that's the reason why we're seeing all of the acquisitions at this point. We're going to see what some people might call theoretically a zombie roll-up. You know, we might see something like that.
Call it that.
Somebody might,
she
you know.
steals from me, man. She steals from me like it's just like it's.
Do you feel
Pharaoh never steals like that.
He's a giver. He's munificent.
He's more giving, and she just, it's theft.
On
Rambo theft.
On the point of deals, if you've got an equity that's bid up and a powerful balance sheet, that equips you to do deals much more aggressively than have to borrow in leveraged markets.
Come on, you can't equate small business America up to many more employees than we perceive with big business like Chevron and Hess. I mean, it's just uncomparable.
Just take it down to the bottom level. I've arrived in a new country. Am I going to take a mortgage at 8%? Am I actually going to go out there and borrow money at 8%? That's me.
Well, that's the reason why people say that the mortgage market's broken.
He's in New York City. Does he understand that?
You don't buy? You can't buy.
It's either all cash. You got to have all cash like Pharaoh.
It's a bit like Dubai.
Yes.
All cash.
You need to have relatives.
We're going to quote him on that. We're going to banner up for radio on that. Cranny saying New York City, a bit like Dubai. Please stay with us on a Monday. Many different narratives, including bonds. Thomas DeSores, next. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance, Jonathan Farrow, Lisa Bramitz, and Tom Key. Mr. Farrow on assignment with an umbrella and a cocktail. Hope he's doing well this week. Manus Cranny in for 6 of the next 5 days. We're thrilled that he could stop by here. Of course, expanding large in the 5 a.m. show. Don't forget the Manus Cranny Danny Berger Report. You'll see that at 5 a.m. here. across the Atlantic, getting you started on the day in America. We're going to get you started with a data check here very quickly. Futures negative 21. The VIX is, to me, a headline item today, underreported. 22 level on the VIX. You can almost round that up to 23. And, you know, it's not 30. It's not the angst to 30 or, dare I say, 40, but quickly from an 18, 19 out to 22. Yields we'll get to in a moment. Tom Satoris with us with Strategas. We're looking at 4.99%. We had 5% on a 10-year. And Lisa, dollar weaker. Yen, I guess nobody wants to talk to me about the yen today. They say it's a non-story, so I'll go to $92 Brent crude. As you are under surveillance.
Yeah, and by the way, we will get to the end because I thought it was actually kind of interesting as well. We are very focused on the Middle East and what's going on there. President Biden and Israeli Prime Minister Benjamin Netanyahu pledging to continue the flow of aid into Gaza while securing the release of hostages held by Hamas. The two leaders speaking on the phone yesterday, this according to the White House, and on Friday, an American mother and daughter were released by Hamas. An anticipated ground invasion by Israel into Gaza has been delayed. And Tom, I was really struck over the weekend, Israel saying 222 hostages are still staying with Hamas. And to me, how much does that color the entire conversation about how this proceeds?
It not only colors the conversation, but if Qatar's had success in getting them released, at the margin, when are the next releases? And that's a huge mystery on a Monday afternoon.
And what do the negotiations look like? What are the points of leverage? Meanwhile, Chinese authorities starting an investigation into Foxconn Technology, a major supplier of Apple's iPhones and one of the largest employers in China. State media saying that regulators are conducting tax audits and reviewing land use by Foxconn. Authorities also arresting an executive and two former employees of WPP, which is that big advertising company. All of this making international businesses highly uncertain about doing business in China and uneasy. And I just wonder how much you start to see in some of the earnings that we get, the tech earnings, a pullback on the margins from China.
It's going to be interesting to see what Apple says about demand in China. We know it's not been phenomenal. I think the interesting thing, this is just simply very much a slap, which is to remind you, wealth management was deconstructed. The housing industry was ripped apart. Tech was ripped apart. This is to remind you that nothing has changed in China, that when that moment changes at the very, very top level to shift, it shifts literally in the click of a finger.
Did either of you see? Are you trying to snap as well as he did?
I mean, he's gifted.
Yeah, he is gifted. Wow, that was a really good snap.
We won't sing it. Look,
yeah, is that a promise?
It's a reminder. It's a reminder. You know, buyer beware. You want to do business. You know, are you going to onshore, friendshore, stay where you are?
Did you see that Jon Stewart pulled out of this Apple production over the weekend? Because he basically was saying he wanted to come out and talk about China in a certain way. And he was told he shouldn't do that, and so he stopped his production entirely, which just sort of gives you a sense of the controversy. Meanwhile, this one's for you, Tom. Speculation around the Bank of Japan making some kind of policy move this month, growing as the yen tests 150 against the dollar. We crossed that line yet again. Everyone's saying, intervention. A report by Nikkei Business Daily fueling speculation the central bank will tweak its yield curve control at its board meeting ending in October 31st. And I take your point, Tom. This has significance, and it has significance not just for the yen, but also for yields.
It triangulates away to euro yen as well. Take out the dollar, and I've got that at a 159.05, and I haven't done the technical work of where strong euro, weak yen upsets the apple cart. But 57, 158, 159 shows me the tensions that's there, and it will be in flows from Japan, not an interest rate analysis.
Exactly, and the flows from Japan. But that's exactly it.
Dornbush.
How much are these flows really what's going to drive the next leg higher in yields? What is behind it? We don't even know. At a time when yields are the highest in the U.S. going back to 2007.
On a Monday, we're going to pause, and this is a conversation I had over the weekend with, all this bow tie babble that we're doing. Is Cranny going to wear a bow tie tomorrow?
There's, no
negative chance.
No.
He'll sing with you, but he's not wearing a bow tie.
Tomorrow.
Sartorial elegance is all yours.
Thank you. But what we know for certain is the impact on America. Tom Satoris is with Strategas. It's a Baird company. He's had a fixed income, but he's got to bounce off the great Jason Trennert as well. And you floored me with an analysis that 70% of America are voters that are small business and they're in the churn, and they only make up 5% of the GDP. Has the Fed left them behind in this yield environment?
Well, I would very much say so. The Fed, by overly relying on the Fed funds rate to tighten, has put so much of that pain on Main Street USA. It's almost as if we've decided there's too big to fail. Earlier this year, we decided their medium is too big to fail, medium-sized businesses, Silicon Valley Bank, Signature Bank, depositors there. So if that means that if there's large companies are too big to fail, medium-sized companies are too big to fail, the only place you can actually tighten in the U.S. economy these days is small businesses and households. And the Fed has done exactly that by overly relying on the Fed funds rate. With that said, balance sheet reduction is catching up with the bond market now, and we're seeing Treasury yields rise in the belly of the curve.
Okay, and we'll get there in one sec, which is the technical underpinnings of why we're seeing a sell-off. But to stick on the point that Tom was talking about, if you have such a swath of the voter base that is feeling this kind of pain, and if you have small businesses that account for a significant proportion of the jobs losing momentum, when does that start to trickle into a higher unemployment rate? When does it start to reinforce and then actually bring rates down because of slower growth?
Well, we were already at that point in March of this year. We were 48 hours from a recession, which would have been very deep. And then we had financial stabilization via liquidity injections. So when does it begin to bite again? Probably sometime between Christmas and we'll say Valentine's Day, when the consumer gets those late 2023 credit card bills in January, and you start to see a pullback. I don't see any sort of slowdown in consumption. We didn't see it in the data last week, so that suggests to us the labor market's going to continue to remain strong at least until the end of the year. But at some point in time, those higher interest rates are going to bite all corners of the economy, not just small businesses and households.
Are yields rising right now because of the perception of strength that is given by some of the bigger businesses that are much stronger?
I don't think so. I think yields are rising because we're finally seeing supply come in and really scare those bond vigilantes. The bond vigilantes are back, and they're pushing the term premium up on all treasuries, not just the front end of the curve now.
Well, they've been unleashed not just in the US Treasury market, but also in UK gilts and on bonds. What goes through my mind is that when you trigger through 5% and you see the curve moving so aggressively, do you think that we hit some kind of a point of where risk parity trades begin to get smacked, or where VAR limits at various trading houses get triggered? Do you think that we're going to go into that next evolution of where we see a real liquidation moment?
That's a tough question, because I think we've seen, now this is really the third substantial rise in 10-year Treasury yields we've seen over the last 3 years. Each time you've probably seen those VAR strategies take a turn of leverage off along the way. So the sensitivity today to a 5% is probably less than it was to a 3% 2 years ago, because they've taken, from what we can see, there's been some leverage that's come off. With that said, there's always another break point. I don't know if it's 502 or 517, or we might have already hit it at 490. But there's a break point here where you're going to see another round of leverage come off. And that's part of the reason why it's probably a multi-step process, but that's probably one of the reasons why we're seeing the S&P off again as well, and credit spreads inching higher, because I think we're getting close to that point again.
So who steps in here? This is the debate that the three of us have had for the past 2 hours, which is duration heroes aren't to be seen yet. You're trading above 5%. Insurance companies have a different accounting system. They don't need to come in and hedge themselves. Who steps into this bond market to cap yields?
Well, there's a good and a bad to this. The good is there's an
Give me the good.
The good is there's an enormous amount of plain vanilla core fixed income strategies that will just love to keep buying and buying and buying treasuries. The bad news is those are price-sensitive investors. They're not like the leveraged investors of the past. So they're going to basically come in after there's a concession. So treasury supply comes in, yields tick a little higher, they come in and buy on the cheap. They're not going to be price insensitive who will buy on any dip.
You are a grizzled veteran of this. I'm going to give you 2 ideas. One that we talked to Wei Li about at BlackRock, which is the bid walks away. All of a sudden on price, folks, not yield, price of bonds, the bid walks away, and the great Chris Whalen calls this the Whalen silence. You're out there, you're on your phone. This is the old days, man. As you'd buy tickets here, sell tickets here. You're on your phone and you're going, I got $1 gazillion of the Trenner, you know what, and there's just silence. Nobody wants that piece of paper. Are we close to that?
Well, some would say we've actually hit that. There was a lot of fear about 30-year auction. There's a lot of fear about auctions on the front of the curve over the last few weeks, saying there were even headlines.
What about desks? Norway calls up and they go, I got to sell a zillion years of that cranny of 2042. Is there somebody there to buy this garbage?
There is, but you're going to have to put in a price concession. That is, yields are going to have to push higher than what the market is trading at. And the Treasury is now no longer immune to this.
I said price concession and the Brammo cam shook. I mean,
at what point?
That's the reality.
Just real quick here, Tom, to sum it all together, are you getting compensated for the uncertainty right now? Are you buying duration?
Yes, we would be. I think you're being fairly compensated. Our own measure of the term premium on the 10-year Treasury, it's above 100 basis points. That's a very important level, not just symbolically, but what it's telling you is that you're getting normalized cushion for that uncertainty. This is where you normally would be. So we feel you're being compensated. Doesn't mean we can't see yields tick higher here, but you're being compensated for the risk going forward, I believe, at this point in time.
Jason from a cigar bar in the East Side emails in and says, talk about me. Okay, let's talk about Jason Trenner. How does this fold in? How does your fixed income analysis fold into Jason Trenner's call on the equity markets?
Well, it makes us that much more bearish on the economy because we continue to see another source of stress for the consumer and now businesses picking up here. So what we're doing is we've delayed recession and we've said we're going to avoid recession at all costs in 2023. But that itself, there's cost to that. And the cost is going to be that the breaking point is going to be when yields are higher, which means there's more risk of financial credit events. And
are you predicting that?
Nothing that we can see right now, but by the nature of those types of events, they're places you can't see them. So at a 5% 10-year Treasury, it's much more likely than it was when we were at 350.
Right.
So where it is lurking, that leveraged investor who is caught off guard, we don't know. We don't see that happening at this moment, but it's on our horizon.
Bottle it. Tom Sasoris there of Strategas there in fixed income, the effect across all of the American economy as well. The yields here, the 2-10 spread, 13 basis points. I told Tom he can't leave the set until we get to disinversion. We're not there yet. Maybe it'll happen in the next hour. 10-year real yield, 2.51%, busts us right out to highs. Futures at -17. That would be a -0.4%.
Everyone's been waiting for something to break, Tom. That's basically been the story, is that everyone's just saying, this feels too quick, too much, too quickly, and something's got to break. And, arguably in March it did. The Fed came in.
Right.
Why haven't things broken yet?
Because of buybacks. And here's one again. There's a great article. Robert Schiffman of Bloomberg Intelligence.
That was a pivot.
Robert Schiffman's a jewel. He goes through the buyback process of big tech with all their cash flow. Man is cranny, channeling Alex Steele. Chevron buyback to increase $20 billion a year after buying the New York Jets Petroleum Company.
There you go. But this is the incentive to the shareholders to get it across the line. I mean, buybacks have been, for time immemorial, the reason why we justify there is no alternative, the reason why you want to be long stocks. It's buybacks anonymous, isn't it?
It is. Buybacks are there, and we'll see a lot of that into the earnings season, and of course, through November 2nd. And Apple
Although I will say, if that's the
Go
case,
ahead, please.
why are Chevron shares lower? By almost 3%.
Well, free cash flow, what is it? Free cash flow is going to double. They're going to do a monster buyback. Who knows?
Thank you, Dennis, for that incredible analysis.
He's brilliant on the sell side. He goes into Fidelity and he says that, and they're like, oh my God.
I just wish sometimes some analysts would say, actually, we're unsure of the particular reason, just tell the truth.
On a typical merger, the acquirer pops down a little bit until they color out what synergies are. It'll be interesting. I don't know how you have synergies in a growth petroleum drilling item like Guyana, which is east of Venezuela.
Do you know the way to Guyana now?
Very good. It's a Bob Hope movie from 1946. Coming up here later this morning, Alex Steele in conversation on Chevron, on Hess, with Worth and Hess. Look for that. This is Bloomberg. Good morning.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
I think it's a fantastic acquisition, if you ask me, given the fact that Guyana is actually going to be the most prolific non-OPEC supply growth in the coming years. Exxon, like you said, already has footprint, and as does Hess. So Chevron now, through Hess, gets exposure to that. You know, Guyana's production has been growing by 200,000 to 300,000 barrels per day.
Amrita Sen, brilliant this morning as we get up to speed on what Chevron is doing. You know Chevron, one of our giant oil companies, and they have acquired a company foundational to New York City, to Manhattan, and to all of the Northeast. I know it is Amerada Hess. It is, of course, Hess. And in conversation this morning with Worth of Chevron, a known commodity, Alex Steele joins us now on Leon Hess's son, John Hess. Why did he affect the $60 billion transaction?
I don't know, and I'm going to actually ask him that later on today. And I say I don't know because you can usually see an acquiree needing or wanting to do it for different reasons. And I'm not sure that we have that total answer yet for John Hess.
Okay, this is really, really important, folks. And I think the way you're wired in, guys, Alex Steele, just so you know, is the only one who's actually been to Cushing, Oklahoma. The rest of us talk about it like we know it. She knows the zip codes, the diners, the whole thing. Were you surprised?
I don't actually know the zip code for Cushing.
Pioneer was like, okay, yeah, I get it.
The street was quite surprised on this, also because where you see and think we're going to see consolidation is the Permian. So no one was kind of looking out for what the Guyana M&A was going to bring.
Permian's Texas over to New Mexico.
I've been there multiple times and maybe know the zip codes and the diners, but
Motel
Cushing,
6
different
in
story.
Midland.
No, are you kidding? Midland's hot right now.
There's a
no
question,
Motel 6.
though, that people were thinking of this in the shale patch. They weren't thinking necessarily outside, but Amrita Sen said this is just the beginning, because now it's about profitability, not just exploration. And so how much is this sort of the tip of an iceberg that you see percolating much more quickly?
Huge.
Okay, so how big is this
Because
iceberg?
you know what it actually is about? It's about capital discipline, which I know is weird to say when you have a $60 billion deal, but it's capital discipline because that's cheaper than pouring billions and billions of billions over decades into a brownfield or greenfield exploration.
So how much are we looking at a situation where there's going to be less exploration, less drilling, and much more just consolidation and efficiencies of scale?
That's going to be it. Because the energy transition. Like if you were Chevron, are you going to build another Gorgon in Australia? That could have cost overruns, that could take decades to actually get up and running. No, you're not going to do that when the energy transition is happening. You're going to go pay $60 billion for Hess and exposure to Guyana.
I mean, this is so important. It goes back to the London desk of Sanford Bernstein, Bendel, and that crew years ago, where they just said, you can't dig anymore. You just got to go out and buy the existing thing, which here is Guyana.
Well, it's 11 million barrels. That's what they're getting their hands on. So I think Alex's point that she makes is incredibly important. If you're going to be able to instantly turn on the tap for your system of another 11 million balance. What caught my eye is the transaction itself, and this is where I'm curious, is that it's an all-stock transaction, is that correct?
Yes.
I mean, that in of itself is significant, isn't it?
Yeah, and the funny thing is that I talked to Mike about this for years, is that the street has been after him to do a transformative deal, and he wasn't doing it. He was sticking very clean to like, I'm gonna buy small deals, I'm not interested, I'm only gonna do it when it makes a lot of sense. They've been waiting for this to happen because of their stock price, and then it happens, and then the stock is kind of down.
So tell me then, I mean, Tom asked me a difficult question earlier, not that he doesn't ask difficult questions, but, you know, it's like, you know, why is the stock a little bit lower? I said, who knows? He wasn't happy with that, but he's announcing a share buyback, which is the sweetener as well, which is $20 billion. So he's using all his tickets in terms of he's using stock, and he's announcing a big buyback. So what does this tell you about how he's going to frame the deal to the street?
Well, also, I mean, the stock's done pretty well. I mean,
Tom's upset that it was down this morning now, so...
I understand, but I mean, like, but the stock has outperformed Exxon and Chevron, have outperformed their European guys also, for the reasons that we well know. So I feel in terms of the energy transition, investing in solar and wind, etc. So, I mean, to that extent, you can sort of make the point that, okay, maybe the stock is going to get dinged a little bit, but the call is ongoing right now. So the questions are underway. So we'll have more of a clarity on like what the street is looking at it for and sort of how they're skeptical or not.
Yes, Tom? Were you going to say something?
No, please, Lisa, jump in
Alex,
here. I gotta, you know.
There is this question at this moment, what's next, right? If it wasn't just the Permian Basin, if it wasn't just shale, what are you looking to in terms of the types of transactions that we can expect and how big they're likely to be?
I mean, after Exxon and Chevron, like, I don't know who's going to be left. Like, Manus, maybe we're looking at a BP or a Total, but like BP is a mess in terms of their CEOs.
Their own
they have their
internal
own problems.
issues. Yeah.
Shell's trying to pivot more to oil and gas. Do they go back into the Permian? Like, they just got out. That feels confusing. So I don't know who else is going to be there to buy a transformative deal. Conoco's already doing their bolt-on, so I don't know if it's going to be another transformative mega deal.
How much is there pressure from OPEC Plus to not do some of this? Or how much is that the pressure that's forcing some of these deals to become as efficient as Saudi Arabia, which is incredibly efficient?
I mean, you could argue like the U.S. is already producing over 13 million barrels of oil a day. So they already produce more than Saudi Arabia. But to your point, I think it's about monetizing the assets in the ground today, because in 20 years, it's not going to be worth as much. I think it's that story, which is ironically what Saudi Arabia is also trying to do. They're trying to keep the price at a certain level so they can get the oil out that's there. Their spare capacity is worth more now.
But don't forget, the cost of production for Saudi Arabia and the United Arab Emirates is like down here. It's like literally you drive out and you go...
Yeah. Like you can't really compare it.
That's a representation of
especially
what
the
billions
fiscal,
of capex is about.
But the fiscal break-even is quite high.
Well, the fiscal
which
break-even
obviously
is a lot
Chevron
higher. It's
doesn't care about.
$85. Yeah, they don't care. But it's about who in Europe goes to. So this is the American trade. This is the American M&A landscape. What happens with Equinor? What happens with the European producers? Are they going to be bounced into doing deals?
I want to cut to the chase here. You've got an earned reputation in speaking to oil executives. Mike Wirth is of the Fighting Colorado Buffaloes. Did he bring Dion to Colorado? Was he instrumental
Is this
in bringing
sports?
Deion Sanders?
I know literally nothing about sports.
Deion Sanders came to University of Colorado. Did Mike Wirth affect that transaction?
I don't know. Football? Is this what is this? Is this rugby?
What it is,
like,
it's surveillance.
Is it basketball?
No, Alex, it's Bloomberg surveillance. If you don't know the answer, if you don't know the question, make up an answer.
Yes, and
That's
the
what we
answer
do.
is yes for rugby.
Perfect. That was great.
England's out of the World Cup.
All of this is great, but the bottom line, Alex Steele, you have the most important interview of the day. Forget about Wirth and Hess. Can't wait to see what John Hess says. You get Virgin Atlantic. I get that. Okay, great. Ed Bastian on the massive screw up at Delta on their damn lounges. I was in there. I couldn't even find a place to sit. What are you going to ask Ed Bastian today as he salvages his relationship?
I mean, Sky Miles, man, like they messed up. Like they went too hard, too fast. So we're going to be like, what are you doing now? You have to backtrack. So what are you going to be doing now?
Do they have the upper hand against United right now?
Oh, I would say yes. I mean, they have different parts of their business too, right? Like they have the Amex partnership, which is really important.
So which card should I get? Should I get a Delta card?
It's a Delta
I'm
Amex,
Emirates all the way. So what do I need?
Delta Amex.
Delta Amex.
Sky
I've got
Money.
no credit history.
What? How old are you?
Really, it doesn't import in?
What?
No, it doesn't
How has this
import in. I
happened?
did not know that.
No, it doesn't follow me around. Thank the Lord.
It doesn't. That's terrible.
I'm zero credit rated in this country at this juncture. Good morning, Bank of America.
I have a
I'm
solid.
stunned. I'm looking at him with my mouth open.
I have a solid 290 credit rating. We covered this.
And I'll leave you with this thought.
That's not a
I got a credit card, but we can't say which bank because that would be.
No, we don't say that.
We don't say
we
that.
Don't say that.
We don't say that.
But it's going to be timely. I mean, they're in an uproar. All of these airlines are tanking, aren't
Yeah.
they?
Well-
What's the plan?
Well, also, Ed Bastian and Shai Weiss are supposedly really good friends too. So it's going
You
to.
think it's a merger here?
No, I just think they're going to talk about stuff. Apparently, they have a competition about shoes. I don't know. This is a Guy Johnson thing. He's been talking about shoes all morning. So it's
Virgin
also
needs
about
to
them
merge.
together.
Guy Johnson's very British.
Virgin has to merge, right?
I have no idea.
Okay.
Do they? Why? You tell me. Why would they have to merge?
Because it makes for good theater on early morning TV.
Ah, okay.
You know, it's a date at 10 a.m.
But maybe Virgin Atlantic will give something to the rugby team in Texas.
She is
Okay, I'm out. I'm actually out of this hand of poker.
Alex Steele, thank you so much. I greatly appreciate it. We're going to try to get it back on the rails here, but seriously, 2 key interviews this morning. You'll see this in the 10 o'clock hour. Guy Johnson and a player to be named later. They'll be speaking with Chevron and Hess. This is John Hess, the son of the founder of Amerada Hess, and Mike Wirth, of course, of Chevron. And then later on the airline business, Ed Bastian, really timely with Shai Weiss of Virgin Atlantic as well. The airline's really struggling here with Brent crude where it is. Lisa, to get on track here, I'm still absolutely stunned by a 10-year yield, 4.98%, a 5% print 2 hours ago.
And how much is that kind of forcing the issue of some of these mergers, just to bring it full circle, because you need that economies of scale to service your debt. Does the U.S. government need economies of scale?
One of the most important moments in this 2023 was Jeffrey Curry of Goldman Sachs saying that new real interest rate dramatically changes oil manufacturing worldwide.
All of a sudden, it costs something to park your capital in a physical asset.
An eventful morning here for Bloomberg Television and Radio. Look for our conversation on a $60 billion transaction, Chevron and Hess. Katie Nixon from Chicago next.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop
until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Fed speak out there for the last year, higher for longer, is truthful. It's what's happening.
Central banks are going to be, on average, facing supply shocks where they're constantly needing to push down on inflation.
For now, the Fed is still looking at some of these forward indicators, and that's why they're so cautious.
The question going forward, just how strong is this economy? Does it warrant yields above 5%?
The challenge is not necessarily where yields are, because growth is still so strong.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Slowly, and then all of a sudden, a whole new world in yields. Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Television. Tom Keene, Jonathan Farrow, Lisa Abramowitz. John is off on vacation. Menace Cranny very much in, which we are very pleased. A good and beautiful thing. Tom, it is a whole new world in yields when you talk about 5% on a 10-year yield, when you talk about 2.5% on the real yield that you're looking at.
With all the narratives going on, it still is about what the fixed income market signals here, and it signals not only the history here of going through a 5% 10-year that takes us back to 07, before that even back to 1992, I believe. But I'm going to look at a real yield up 7 basis points, buttressed nicely up against 2.52%. I thought Thomas Torres of Strategas was stunning on the impact of this yield structure to most of America, not Chevron Hess America.
Exactly, that you're basically seeing the pain bleeding out in smaller businesses, but it's not really represented by companies that are seeking an economy of scale. And Menace, maybe that is the linkage right now to why we're seeing an accelerating number of tie-ups in the energy patch in the time where you really need to see those economies of scale.
Well, it's when, not when, but defining when peak oil is going to be, and lots of people have done that over the past couple of years. These companies need scale, they need to deliver. That's why they're doing the deals. The next shoe to drop, Alex will catch up with the CEOs, the next shoe to drop is what kind of deals are going to be done in Europe as a result of the American consolidation that you see.
But this goes to your point, Tom. You've been talking about zombie roll-up.
Yeah.
Sure, I could try to steal it from you, but I won't. You did talk about how this would essentially be the story of the year. We haven't seen it to such a big deal, but are we starting to see it now as people get a little bit more desperate and get the sense that maybe yields are not going down as quickly as they previously
The key
thought?
word there is desperate, not to slow the opening of the 8 o'clock hour down, but I'm seeing elements of desperation there which force those kind of transactions. The Financial Times article this week on Kathy Wood, who you and I and John spoke to, was scathing of how Kathy Wood is rationalizing losses within her fund is a benefit to her shareholders. That's one of the silliest things I've ever seen. And I'm not saying...
Well, there's a lot of fund managers out there going to have to do that.
Yeah, but I'm not saying that ARK is a zombie roll-up, but I'm saying there are all these shades and elements of this rate of change of yield move that we've seen.
Well, you've been raising this a lot, the price down aspect of bonds, yields going up. And at what point do you realize those losses?
Let's go up the road from Dubai. Menace Cranny, you've lived it. Abu Dhabi, and the not only their sovereign wealth fund and oil prosperity, but the stub they have in technology. Are we going to see write-downs in this yield move of private equity and shadow transactions that we really don't follow on a day-to-day basis?
Those funds, I mean, some of the biggest bond buyers in the world have traditionally come from Jeddah. There's massive banks in Saudi Arabia. There's the traditional sovereign wealth funds. Those sovereign wealth funds are perhaps less exposed to treasuries now than they were 20 years ago, 30 years ago, when I was a young bond salesman going to Abu Dhabi and Dubai and Riyadh and Kuwait and Oman. The structure has changed, and how they deploy their capital is absolutely irrevocably changed. They're not so stuck in treasuries as they were 30 years ago. They are structurally more diversified than you and I can even dream of. The PIF has an office down the road. Mubadala has an office down the road. So the structure of holdings is different.
Do they own English rugby?
No, but not yet, Tom. Just
Not
wait.
yet. Wait on that.
There is this issue.
They lost this week in Australia.
How did we get to rugby?
Well, I think that that was a nod
Welcome to surveillance.
the randomness of the joy of the mornings. I will just say, let's take a look at markets and what's going on right now, because those yields have come off some of the earlier highs, and with it, you do see a tempering in the sell-off a bit. S&P futures lower by 0.5%, 42.27, but this comes ahead of $15 trillion, more than $15 trillion of market cap. U.S. companies reporting earnings, including Meta and Amazon and Microsoft. Euro, a little bit stronger, but really basically stasis. The 10 years, whereas the information is 40 basis points in 6 trading days.
What we do at Surveillance here, folks, is we get out front of the information you need on these transactions. We always protect the copyright of our guests, and we protect the copyright this morning. Get from Citigroup, Scott Gruber's first look. It's Chevron Hess. Lisa, it's simple. He makes no bones about it. Guyana is the core of John Hess's shop. He also says Chevron Hess has, and I love this quote, might not have the zing of other transactions. He walks through some fancy ratio analysis, which is 2 months from Monday morning. But Gruber a little bit tepid on this. He says Chevron needs high-grade assets.
Doesn't quite have the zing means that the shares are lower by about 2.3% in pre-market trading. Really, to understand the cross-section of higher yields and what that means for a corporate complex that's managed to adjust and adapt pretty well so far this year. Katie Nixon, Chief Investment Officer at Northern Trust Wealth Management. And earlier this morning, Katie, we were talking with Wei Li of BlackRock, and she said for the first time, after 3 years of being underweight duration, they are moving to neutral. Are you feeling the same kind of feeling in your portfolio?
We are feeling that kind of feeling, Lisa, and yields right now are above our target range based on all of the elements that you all have covered so nicely. Fundamental, technical elements have driven yields beyond where they probably should be, so it does feel like a time to take on a little duration. It's also really a time to just reassess portfolios in general and recognize that at a 5% 10-year, you can really de-risk your portfolio out of equities and into fixed income, believing that yields will eventually be coming down.
So, Katie, if you're there and BlackRock is there via Wei Li, what goes through my mind is how positioned is the market for this moment? A lot of people were long and wrong at 3.75. Stephen Major was with me last week. He said, look, I was wrong all the way up. It was rich at 4. It's rich at 5. How underpositioned is the market? Do you think this is the moment when duration hunters will be heroes?
I think it's quite underpositioned. And Lisa, I love when you said slowly and then all at once, because probably that's how it's going to correct itself, is that investors will reposition because everyone's sort of been chasing this market in the wrong way. I think this has made, strategists, economists, investors very humble as we underestimated inflation, we've underestimated growth, we've just been on the wrong side. Yep. Catching up.
Katie, I look at this, and I'm going to go back to Wellesley College a few years ago, where at gunpoint you had to study with Carl Case. And, he was a giant. He was beyond kind to me as well. I didn't attend Wellesley College. I don't know if that's exclusive
You don't
news.
say.
But
something you haven't done.
What Carl Case would say about this is this linkage of economics and all the worries our listeners and viewers have. You need to keep it separate from investment. Northern Trust has done this for a gazillion years. How do you do that exercise now? Keep Carl Case's world separate from what do I do with my stocks?
Well, I think you have to understand, and this is something I think Professor Case would have agreed with, is, the market's not the economy and the economy's not the market. And if you look back and do the empirical research, you see very little linkage, unfortunately, to things like GDP and forward-looking equity returns. So you've got to look at the investment merits of the asset classes that you're investing in. And valuation all comes down to valuation and what's reflected in the market's view of those asset classes relative to what you think they should be priced at.
So are you active or passive right now? I mean, you're in Chicago, the land of Morningstar, and they're like preaching, index. Forget about it. White Sox, Cubs, active or passive?
Well, you've got Morningstar, you've got University of Chicago, you've got a lot of folks on the passive side there, and I think this has, again, I talk about being a humbling experience. This has been a very humbling experience for active managers. My goodness, the Magnificent Seven and the S&P 500 have dominated.
So what have you done with the Magnificent Seven? You're at the stodgiest of stodgy trust companies. You should see their seats at Comiskey Park 40 years ago. Unbelievable.
That's a flesh wound.
But what do you do with the Magnificent Seven at a stodgy trust company like the Northern Trust?
You know what, Tom? Honestly, we believe the markets are pretty efficient. Markets are efficiently valuing those assets, and we do believe in a passive core as part of a client's risk asset portfolio. It's very, very hard to beat the market. Even forget about this year. This has been an extreme example of the overweight of the Magnificent Seven. But go back any year, whether it's high volatility, low volatility, concentrated, diverse, it's very, very hard to beat the market.
And this is something that people are realizing as they get it wrong yet again. You said that you have started to see an opportunity to rotate back into duration, and I'm wondering when you started to feel that, what the trigger point was at a time where we've seen yields march so significantly higher in such a short period of time.
I think it's just that, Lisa, the fact that it's happened so quickly. Against a forecast that we have had around a 450 10-year, 425, 450 10-year, to see it jump from 450 to 5 in a relatively short amount of time was a real catalyst to say there's something going on here that isn't fundamental. There's some technical, some sentiment, something happening in the market. Then I will also say, Lisa, that prior to this, we really had been favoring credit, looking at credit as being a pretty good deal relative even to equities. And I know you follow this really closely. We've just started now to see credit start to readjust to this new, higher normal environment. So again, I think it's time to sort of pivot back to duration.
This is actually exactly what Wei Li was talking about, that they're liking investment grade credit that much less as you're starting to see spreads reflect some of the increase in benchmark yields.
Okay, so where do you go? Are you telling me Northern Trust has moved from a historic 2, 3, 4% cash out to 42% cash?
Not at all, Tom. We are just back at our strategic allocations. We're advising clients to keep at least a year or two in cash. Now they're getting paid to do that. We've always been telling them to do that, though. Now they're getting 5% to sit and wait. And we're advising them to really rethink their investment strategy in this new higher interest rate environment where you don't have to take equity risk if you don't need to. You can pull back on that and invest at a 5% 10-year to fees 10-year goals with treasuries.
We'll see. Katie Nixon, thank you so much.
Thanks,
For the I'm sorry, I have to say because my grandfather said it. The Northern Trust Company and Northern Trust Wealth Management of balmy Chicago. Really interesting conversation there, Lisa. And, you know, again, it's something like we would say with Liz Ann Saunders at Schwab. What are people actually doing right now? What are they doing? I think is fascinating.
We've seen money market flows, although that's starting to shift a little bit, and I wonder how much is going into duration. If you're buying longer-term bonds, it doesn't mean it can drive yields lower if it's a price-sensitive buyer, and I think that is what we're learning the difference may be.
Futures negative 21, Dow futures negative 174, the VIX 22.38. On the S&P, we are down 0.5%.
It feels like as this war drags out on them in the Middle East, there is a feeling that the existential risk isn't hanging over markets quite as much. And Manus, I know you've been covering this quite a bit, but it feels like right now people are saying we're going to wait and see unless there's an escalation. We're going to really just sort of put that in the back burner and focus on everything else.
So I'm going to give you just a moment and a pause for thought. I grew up in Northern Ireland. I've lived through violence. I've lived through peace negotiations. I've seen many wars. I've lived through Iraq and one thing and another. The bottom line is it is so presumptive and so preemptive of these markets to think that it's time to say that cessation is coming. We are far from making that call, and these markets are way too presumptive.
And I would say, man, we could go all day on this. This is a new conflict with the immediacy of video and social. Even over this weekend again, I'm like, I want to hear more about the prosecution of a military event, and I'm not getting that. I'm getting a cable TV narrative, if you will.
Yeah, I mean, you're seeing a lot of people stand in front of screens and talk about what they presume. We'll have this conversation in just a moment with a former general, but the issue is this. Something has happened between the coalition of the West in terms of the communication with Israel in regards to the next steps into Gaza.
I can't say enough about this. Manus Craney with us this morning, John Farrow away for a well-deserved week. Coming up, Next, Terry Haynes will join us of Pangea Policy, and I'm thrilled to say Frank McKenzie will join us later, the former general, the 14th commander of the U.S. Central Command. Please stay with us in New York on radio and television. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything. Today, Bloomberg's Guy Johnson and Alex Steele sit down for an exclusive interview with Virgin Atlantic CEO Shai Weiss and Delta CEO Ed Bastian. The health of airline companies, the future of business travel, and headwinds facing the industry. Tune in today at 11:30 a.m. Eastern, 4:30 p.m. London time on Bloomberg Television. Context changes everything.
We expect that there's a likelihood of escalation by Iranian proxies directed against our forces, directed against our personnel. We are taking steps to make sure that we can effectively defend our people and respond decisively if we need to. This is not what we want, not what we're looking for. We don't want escalation.
The Secretary of State, Antony Blinken, there with NBC this weekend, an immovable story already changed from what we heard on Sunday. We say good morning on radio and television. John Farrell, Lisa Bramwitz, and Tom Keene. Mr. Farrell, south, somewhere warm. You know, it's like he's smarter than we are. Manus Cranny, we are hugely advantaged to have Mr. Cranny choose to visit. His people were really uncertain. And, you know, Manus, seriously, to have you in here with the Dubai experience, what does the media frenzy look like for the United Arab Emirates? What is it? How does it synthesize over there?
You know what's interesting is a couple of weeks ago we had King Abdullah here in New York at the UN meetings. We also had Anwar Gargash, who's the de facto foreign minister for the United Arab Emirates, who signed on to the Abraham Accords. This is a very delicate moment for the UAE and for a number of other nations that have very close relationships now with Israel.
But you fly in, folks, and all of a sudden you're looking down at, you know, it's deserty-like thing, and then you realize, I got my compass wrong, but it's a flight path into Dubai, and you're flying over Iran.
Yes.
Like, you're like, okay, I'm over Iran. Is that good or bad? And then you turn right and you go into Dubai past $1 gazillion of office development. That's how close UAE is to Iran.
It is, and that is the whole crux of escalation risk. The proxies of Iran and how they may launch new assaults on Israel. There's already mini skirmishes, but of course this is about escalation risk. I've said it to you before the break. these markets are very presumptive and that we're going to get that.
Well, it goes to your point about how we don't really know what's going on and how, yes, there's a media war right now where everyone's trying to get the upper hand in the narrative, but we have no clue what the negotiations of the UAE, and Qatar, and Saudi Arabia, and the proxies from Iran really look like.
We heard from the Secretary of State there. We need to get another important view, probably more important than the Secretary of State. Terrence Haynes joins right now, founder of Pangea Policy. Terry, I mean, to move, and so honored to have Manus with us today with real-world experience. Do we have an Iranian policy?
We've got several, Tom. We had one before a couple of weeks ago that had that was considered by its enemies to be an appeasement policy, but I think Secretary Blinken and others would have called it a rapprochement. Either one, I think, has been blown up by and large and replaced with one that we're groping towards now, which is a kind of three-quarters confrontation, one quarter rapprochement policy. So. So we're moving in real time towards a very different policy than we've been talking about just a couple of weeks ago.
The 12th commander of CENTCOM, Mr. Austin, was on with us this morning. General McKenzie will join later, the 14th commander of CENTCOM. Is CENTCOM advising or telling or listening to the Israeli Defense Forces? What's the relationship of our military on a Monday afternoon with the military of Israel?
They consult very closely. They always have. I mean, they do in real time, whether there's a crisis like this or not. But at the same time, I think what you're seeing is from Secretary Austin and others, a desire to have the Israelis, among other things, advise rather forcefully. They're talking in two sorts of ways. One is kind of strategic, tactical, supportive on whatever military operation the Israelis do, but at the same time, there's a more advisory role about the second, third, fourth steps. What may happen down the road, and kind of what we're prepared to do and may not be.
Terry, are we seeing the U.S. lose its leadership role when it comes to geopolitical negotiations?
I think we're seeing it challenged, certainly, and so it's up to the United States to recover that. There has been a muddle. No point in me overemphasizing it, but there's been kind of a muddle in United States geopolitical leadership ever since the withdrawal from Afghanistan a couple of years ago. It seems clear in retrospect that what ended up happening was a very bad signal was sent to those who wish this country ill, and we're now scrambling to recover that.
Terry, can the U.S. do what it says that it wants to do if we don't have a speaker in the House?
Yeah, I think so. Firstly, I think we'll probably have one this week or next. But more importantly, what you've got is, Biden says he's going to send an aid package down. Apparently, the Senate's seen part of it, but not all of it. The Senate will under current schedule, will try to take something up next week to start that process. By the time the House resolves its speakership issue, I would expect the House to catch up. But the Senate is hugely more consequential in this than the House, and I would note much more bipartisan as well. Both Schumer and McConnell are broadly, generally, as McConnell said yesterday, on board with the idea that these are all part of one conflict, but it's going to be up to all of them to convince the rest of the Senate and much of the House.
Terry, good morning. I just want to carry on from Lisa's point, which is about U.S. foreign policy, exceptional lead, the dominant force in the world. To sustain that narrative, how important is it that they get the $100 billion that Biden has asked for? Is the size of the aid for Ukraine and Israel inextricably going to send a global message about what U.S. foreign policy strength is at the moment?
That there's substantial aid, I think, sends the, I wouldn't peg it to the number itself, Manus, but that there's substantial aid for both conflicts is going to send a big message. If what the Congress comes out with is one or the other, that's going to send a bad message. The real fulcrum and the real problem here is that Biden has very little to no political capital to affect the result. So what you'll end up with is a situation where Congress, and I think principally the Senate, is going to make a decision on the amount of both aid. I do think in the end you will see something anything close to what Biden is asking for, but also it's going to take a couple of months to get there. And for both geopolitics and for the markets, that's going to seem way too long.
Given that the U.S. is now defending vicariously in Ukraine, in the Israel-Hamas war, we haven't spoken about Taiwan, and it is there. It's a very real risk. Is it a neglected conversation?
I don't think it's a neglected conversation. I think we're now in a lull was probably the wrong word, but we're in a less overt phase of the People's Republic poking and prodding Taiwan and its defenses and the United States willingness to defend. I wouldn't be a bit surprised if you start seeing that poking and prodding coming back up again. Right now, the United States is able, by and large, to carry to spread out appropriately. But the risk here, which is implicit in your question, is that one or more of those turns into a hot war. Do we have the capability? And secondly, do we have the material and the ability to replenish? And that's very much an open question.
Chair Haynes, thank you so much. This morning with Pangea Policy and the Movable Feast. Again, this afternoon, Joe Matthew, Anne Marie Horton, Balance of Power, will drive forward this conversation. And we barely mentioned today the upset. I believe you had earlier that there's a 6:30 confab at Ben's Chili Bowl.
Yeah.
Where all the presumptive speakers are going to get together
Have you ever been there?
U Street.
Have you ever been there?
Have I been there?
Yeah.
There's photographic evidence.
Yeah, is there? Did you actually eat
Not
a
the
chili
Ben's
dog?
Chili Bowl at Reagan. The Ben's Chili Bowl on U Street is the real deal.
It is. I've been there. It's quite good.
I even
will
took
say,
the Offspring.
So there is going to be 9 candidates up for the House
Takes
speakership.
a whole front bar there at Ben's.
And it's just who's next, right? I mean, do any of them have any critical mass? It was interesting. Terry just said that he thinks we're going to have a speaker sooner than later. And maybe that's because people are just sick of this. We are going to keep this conversation going, not just the sick of the discussion, but also the bond yield space. Caterina Simonetti of Morgan Stanley, Matt Brill of Invesco, Keith Lerner of Truist Advisory Services, all weighing in on the open. Pharaoh's off. I'll step in.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
how do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple of people, our average restaurant now does about over $1 million per restaurant in digital sales.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
Bloomberg Surveillance on a Monday morning. Jonathan Farrow, Lisa Bramowitz, and Tom Keene. Bramo's run. Farrow's run. All I'm left with...
You got left with me, buddy.
...is Manus Craddy, who's giving us great perspective. Seriously, folks, with decades of experience. And I mean not only like showbiz experience, but street experience in a fractious Middle East. What's your number one observation on... Everybody's just calm. Brent's only 92. All of the cranny radar must be up.
I want to take you back to 1994.
Yeah, I remember it. Yeah.
The bond market was rather tricky. The single biggest margin call that I ever had was with an institution, which we won't name. But it was one of those moments in the bond market where the margin calls were not met, where the self-fulfilling prophecy of liquidation took over and the narrative shifted. And we have not, in my humble opinion,
seen it.
We have not seen that
agree.
yet. So that's just my personal observation. Yeah. Stephen Major is greater minds than you and I, and he talked about capitulation.
Right.
I think capitulation today is something to what I experienced 30 years ago. I'll leave it there.
Yeah, I'm going to leave it as the Whalen silence. I can't say enough. I've been bringing this up to like, who's Whalen? And it's like Chris Whalen, who's lived this like Manus Cranny, and there's a point where your call's not taken in the bond market. Today, the history of a 10-year yield, 5%. Right now, we're enjoying 4.98% there. Kathleen Buss-Johnson is going to join us here on our 5% GDP. But right now, and this is really an honor to have in the studio, Brooke Sutherland. She's with Bloomberg Opinion. The day starts at 10 a.m. We're thrilled that she could join us today. And this is something that I'm guilty of. I don't talk enough about industrial America. And you were writing manufacturing is cracking. I thought manufacturing was our renaissance.
So that was the narrative that was out there. And I think what we're seeing is that it's much more nebulous and nuanced than maybe the perception was heading into this year. We've had some early reports out from industrials, particularly in Europe. And there are signs that demand is maybe not quite booming to the extent that it was. And a lot of these companies are talking about inventory destocking, that their customers went out and over-ordered to try to get ahead of some of these supply chain disruptions. Now they have enough inventory and are drawing that down. But I think you have to wonder at what point does an inventory destocking stretch start to look like something more troubling on underlying demand if we start to see this happening for a couple quarters now.
Who's going to tell you whether that's a billowing yellow flag or a full-up red flag?
I think you really have to watch the shorter cycle industrial companies. We're going to get a lot of them this week. We get pretty much every manufacturing giant under the sun reporting. Those who are in longer cycle businesses.
So which is most important for you?
I mean, all of them. I take all of my companies are very dear to my heart.
Before 10 a.m., you have to pick a damn company, okay? Pick.
Sure. I think that GE is going to be really interesting to watch from the optimistic side of things. They have really good exposure to the aerospace aftermarket, which I think we should see really strong growth in that, just given everything that's happening with Boeing's challenges with Spirit Aerosystems. You also have Raytheon, their problems with the GTF. All of that is very good news for the aerospace aftermarket, which has started to look a little bit long in the tooth. Then if you want to pivot to a company like 3M, that's more of a shorter cycle industrial where I think you might start to see some of those other trends I was talking about around inventory destocking come to play.
What about, I mean, we talk a lot about it in the ether about onshoring, friendshoring. We've heard it from various U.S. politicians when they go abroad, when I've met them in Singapore, when I've met them in China a couple of years ago. But where are we on that narrative, bringing business, jobs, infrastructure spending back here to the United States, or indeed to Japan, Tom, to Japan, away from China?
So I think there's an issue where there's not really a consensus on what reshoring means. So we are seeing a lot of spending.
Well, there's
in
a
the
political
US.
narrative around it, and then there's the industrial narrative around it, isn't
Exactly,
there? And they're
right.
very different.
Exactly. And so we've seen a ton of announcements, things like hospitals, pipelines. Those are not moving from China.
Right.
We're not relocating those. We are seeing a number of factory announcements, but a lot of those are concentrated in the electric vehicle space. We had a couple of announcements last week from Tesla, GM,
Right.
Ford, all pushing out, delaying investments in some of these factories. And that's what I'm talking about, where
Okay.
there's sort of cracks in the narrative that these might lift all boats, this manufacturing boom,
Well, that's where I wanted
but
to
they
go.
might not lift
Okay.
them all at the same time.
And
or in a
folks,
set
just so
timeline.
you understand, the full Sutherland nerddom is she actually gets the financials as well. Revenue, price in unit amidst a nominal GDP that surprised, like Honeywell or even dreaded 3M with their underperformance. Are we misjudging the revenue pop that manufacturing in America can do?
Sure. So not all of the companies have actually put numbers around what this sort of stimulus reshoring boom might look like, but some have. nVent Electric is one of them that has talked about what the two big stimulus packages in the U.S. might mean for revenue. They're looking at maybe $350 million extra of revenue. That works out to maybe a 2.5% annual boost. You tell me, is that a boom?
Well, yeah, but within the new GDP that we've all missed, is the 4% revenue growth still the 6% revenue growth because of the pop in the economy? That's the heart of the matter.
So I think for some of the industrial
Right.
companies, you're not going to see a lot of volume growth this quarter. I don't think anybody's planning on that. It's a lot of price still, but we're seeing some deflation.
I got one more question. The Gulf Stream, the surveillance Gulf Stream is getting a little long in the tooth. Now, I see the Bombardier's out with something new.
Did Jonathan get that? Did he go on his holidays?
Of course he did. I mean, Francine had it out of Marrakesh and John had it. But, like, if you're looking at private jets now out of Kansas, I mean, this is the fabric and soul of the Kansas girl. Which private jet has the upper hand right now?
It's actually very surprising because you look at private jets as being a boom to bust type of market, and this is one where I really think we might see some stability. And this is heading for, I hate to use this word, but a soft landing here, where we're really seeing a lot of discipline on the part of the manufacturers, and that's really kind of keeping a lid on some of the buoyancy in demand that we saw during the
But I'm
pandemic.
asking for a friend. Which one is your favorite right now that has headroom?
I don't think I have enough personal experience on
squeezing
private
this, right?
jets to be able to give you a recommendation here, but I
busted
can
chops.
connect you with some CEOs who would love to pitch you on those.
Read Brooke Sutherland, folks, at Bloomberg Opinion. I'm not kidding. She's absolutely definitive on industrial America and her Kansas and all that came out of Cessna years ago. We're going to migrate from the industrial landscape over to the American GDP with a 2-hour conversation. Kathleen Bastiancic joins us now, Chief Economist, Nationwide Mutual Insurance. Kathy, once again, you have failed, and everybody else, with a bang-up third-quarter GDP modeled out at 5%. You're going to tell me we can't sustain that. All my radar's up. Why can't we sustain above-average real GDP?
Good morning, Tom. Well, it is unsustainable, and the main reason is that we just don't have enough workers, really. If you break down GDP growth, right, you look at the number of workers and how productive. Unless we're getting a real boom in productivity growth, really hard to sustain 5% growth. And what it also does in the meantime, as you know, is overheats the economy and makes it more difficult for the Federal Reserve to lower inflation. And that's their primary goal. So I think one way or the other, Fed will lower inflation and continue to lower it. But that means that 5% is not very sustainable.
Where are you on the, good morning, good to see you. Where are you on the outlook for wages? Is the heat and I suppose the fury of wage negotiation, is that in the rearview mirror as you look into 2024?
Yeah, good question, Manis. So we're keeping an eye on wage growth, but what we have seen, despite the numerous strikes that have popped up and concerns there, we've actually seen wage growth decelerate. It's come down from 6-7%. It's still running too high for the Fed's comfort, right? It's running around 4% or so, a little bit above that. They'd really like to see that between 3 and 3.5 to be consistent with 2% inflation. But, going back to the labor market is the key right now in terms of wage growth, but also how long this, strong growth continues. It's not ultimately sustainable, but do we see some meaningful slowdown in the fourth quarter? That's really what's important.
Tom chastened me a little bit earlier on. There's a great phrase that I use, if it's grand. It depends how I say the word grand. Grand can mean many different things. I said the US consumer is grand, and Tom rightly chastened me. He said, did you look at the delinquencies on subprime in the auto industry? Did you look at perhaps the underbelly of what is going on? We're going to get retail sales, you know, they remain grand in inverted commas, but suddenly we're dealing with a shift in rates to above 5%. Would you describe the consumer as grand, or how challenged does the consumer become in a world of where rates actually tightening?
Yeah, I think that the way I would say it is the consumer looks to be grand, but there are a lot of headwinds hitting the consumer. Now, the tailwind has been the labor market, very strong, right? As long as the labor market is churning out the amount of jobs, you know, 200,000, 300,000, right? The consumer's going to keep spending. But you have still elevated inflation. You have consumer loan payments, you know, kicking in. And as you said, certain demographics are really challenged right now. And delinquency is picking up a little bit. So it's not a completely rosy picture here, but I would just say you got to follow the labor market. That is the key.
So if I'm the Fed, I'm going to follow the labor market. I'm data dependent, but I would suggest November 1-ish is upon us. And, you know, we're going to sort of have a post-Halloween party. I guess it's a non-meeting. December, for Kathy Bostjancic, how key is the December meeting?
Oh, it's important. You know, I think each meeting is important in the sense, not what they do, but it's what Chairman Powell guides us, right? What do we hear in the press conference? But December, we'll get the revised forecast, right? We'll get the macro forecast and the dot plot estimate. Even though those aren't, you know, golden rule, right? It doesn't mean that's exactly what the Fed's going to do, right? But it's guidance. You know, it'll be interesting to see. Our view is growth slows by more than half, right? In the fourth quarter, we see it running a bit above 2%. But I have to say that handoff, you know, Menace talked about retail sales. The handoff consumer spending to the fourth quarter was a bit firmer than we thought. We really need to see growth for the Fed to feel comfortable below 2%. I mean, Chairman Powell told us he thinks real potential growth is 2%, right? So he wants that on a sustained basis.
I mean, Kathy, you're with Nationwide. Do you have tickets to Michigan right around Thanksgiving? I mean, it's at Michigan. I get that. But you're Kathy Bostjancic. Can you get us into 100,000 people at Ann Arbor?
Only if you're voting for Ohio State. It can only do that.
Very good. We're from Columbus and Nationwide. Kathleen Bostjancic, you should see the seats they got her. You know, this is foreign, right?
Yeah, I don't do corporate.
100,000 seats. This is college.
This whole American football thing is alien to me.
I went to Columbus. I had the honor of giving a speech there, and you know, you go down the street, and it's like Ireland. It's lined with bars the whole way down the street.
What are you saying about Ireland?
You get to the football stadium, and you get to the football stadium, and it's for Kathy Bostjancic and all. It's like religion.
If she gets you a ticket, can I come?
We get 2 tickets. We can
go on the Lear.
You are so far away. If you look over the edge of the stadium, you can see East Lansing in the difference. I mean, I thought this was really, really interesting from Kathy. I want to talk about this here in a moment, man, because I think this underestimation of economic growth. We'll talk about the UK on this as well. Futures improved -12. The VIX at 22.05 as well. On those Standard & Poor's futures, 42.36. We're down 0.3%. We say good morning to all of you on Bloomberg Surveillance. Manus Cranny in for John Farrell, Lisa Bramwitz in deep preparation for the 9 o'clock meeting. Manus, I just got a pick on you here.
Go on.
And I saw Governor Bailey at Marrakesh, shook his hand. He ran for me as fast as he could. You know that they underestimated GDP in the United Kingdom a number of weeks ago. We underestimated GDP in America now. I mean, that's a trend here off pandemic.
I think they've been off kilter in a lot of their estimates. It's interesting when you talk to people in the UK that run businesses there, and they talk about you're still spending inside the UK. You have less labor coming in from outside. People's wages have risen inside the UK, and people continue to spend inside the UK, and that is giving sustenance, bigger sustenance to the economy, perhaps than they had assumed. I mean, what's the last line? Governor signals UK inflation fight has further to run. You could be very shocked what the Bank of England does in terms of rates relative to the Fed.
Well, and the gilts market shows that they've got a bigger challenge. I mean, it's a 1/7 the size of the economy. I don't mean to compare them, but the answer is it's a very different story over there, and seems to be a little more stress in the system than over here.
Yeah, I mean, the retail sales, the inflation numbers, they are showing points of stress. What you don't want to happen, here's a thought for you. Last year, the gilt market convulsed, absolutely convulsed. Yeah. The risk is this, not that the U.S. Treasury market would convulse in the same way, but there are so many prongs of attack on the U.S. Treasury market at the moment, something's going to pop.
Including the bid from China. Wei Li with it from BlackRock earlier this morning. Look for that on Bloomberg Digital. Coming up, without question, our conversation of the day on the military affairs of the Eastern Mediterranean. General McKenzie joins. This is Bloomberg. Good morning.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
There's been kind of a muddle in United States geopolitical leadership ever since the withdrawal from Afghanistan a couple of years ago. It seems clear in retrospect that what ended up happening was a very bad signal was sent to those who wish this country ill, and we're now scrambling to recover that.
Terry Haynes piercing with Pangea policy there on the politics of this moment. Terry Haynes in Washington as well. Manus Craney and Tom Keene this morning. John Farrow on assignment. Lisa Abramowitz getting ready for an important 9 o'clock hour. In the 10 o'clock hour, two key CEO sets of interviews. We will look at Mike Wirth of Chevron, along with John Hess of Hess, and then we'll look also at Delta and Virgin Air. Alex Steele driving those conversations this morning. This is a great honor, and just to give you a window into like the 5 lives of Tom Keene, long ago and far away, not NROTC, but Army ROTC, Reserve Officer Training Corps. I was a winner of the Daughters of the American Revolution Award. This is ancient history. It's just after the Civil War. And, you know, it's a kind of thing you do in college if you don't go to the military academy. Someone who enjoyed this experience but had a sterling career serving the nation was Frank McKenzie. To say he's executive director of Global and National Security Institute, and yes, a former Central Command commander. He joins us this morning. At the Citadel, and I speak here, General, of Natalie Stewart, the Marine Corps winner this year, at the Citadel of that August award. What was it like coming out of NROTC, your first day serving the nation?
Well, I was excited. I had the good fortune to actually go to Okinawa
to command a rifle platoon in the 3rd Marine Division in 1980. It was an exciting time. We deployed to Korea. We did a variety of things that were all very challenging for somebody just out of college. It was a great, bracing, exciting experience, and apparently I like it because I hung around for 42 years.
You are the 14th commander of Central Command. The 12th commander of Central Command is a bit distracted now. What is Lloyd Austin and our people in harm's way? What are they doing this morning in the Eastern Mediterranean?
I think our primary task in the Eastern Mediterranean, and indeed throughout the entire region to the east, is to ensure that Iran is deterred and does not enter the current problems that Israel's having with Gaza. I think that's our the overarching objective of both our diplomacy and the recent military deployments that you've seen. At the same time, we also seek to ensure that Lebanese Hezbollah, sitting up in southern Lebanon, doesn't choose to enter the fray. That would be very, very bad for both those entities, and the that we moved there is all designed to make them think twice before taking that very bad decision.
Is Israeli military or allied military impinged by the volume of modern media? This is different from your tours of duty. This video, this cable TV, this social media, does that affect the military?
I think as a commander, and certainly I saw this at U.S. Central Command from 1999 from 2019 to 2022, you have to recognize that volume of media presence is there. It's not going to go away. You can't ignore it. People are actually getting news from it, what you want to try to do. And here's where we are sometimes hampered. We're going to have an essential relationship with the truth. We want to tell the truth. When we put something out there, we want to be honest about it. We want it to be able to stand up to fact checking, and if we make mistakes, and we do, we acknowledge those mistakes. But many of our opponents, Hamas, Lebanese Hezbollah, the Russians, have no essential relationship with the truth. And so that's not important to them when they operate in the media and in the information space.
General, a very good morning to you. You talk about how collaterals are being deployed. There was a statement yesterday from Secretary of Defense Lloyd Austin III, obviously deploying an additional carrier, the USS Dwight Eisenhower, to Central Command, and also readying some troops just on the risk of needing them. How important is this step change in preparedness for an escalation? Because that does not sound like a nation, the USA, in preparedness for de-escalation.
Well, actually, it is all designed for escalation. The capabilities that we're bringing into the theater are largely involve circle around air and missile defense and the ability to fight in that domain. So that's the threat. The threat to Israel is actually not large-scale invasion from Iran or Lebanese Hezbollah. It actually is the proliferation of missiles, land attack cruise missiles, which are low-flying missiles, and, of course, drones. And so the systems that we're bringing into the theater are all designed to assist in the defense of Israel against those weapons, but also, should it be necessary, we always reserve the right to strike from where those missiles came.
Do you think that build-up is enough in messaging of itself to Iran to perhaps reduce the risk of multiple fronts escalating? You talked about Hezbollah in Lebanon, etc. But do you think that this military show is a message, a communication to Iran about the folly of escalation on multiple fronts?
We know analytically that Iran looks very carefully at the correlation of forces in the region. When we reinforce, they take notice of that. In fact, going back over many years, we can trace very drawdowns in our posture in the region. So I think this will have an effect. Now, look, it's always hard to predict ultimate decisions in Iran. Variables. But I think we're doing all the right things. I think the messaging from the secretary has been very strong, very clear. I think the force posture in the theater sends a very clear signal to Iran.
In the theater, General McKenzie, there will be the question of should we show the flag and should we have a different deployment of our forces over a long period. Do you see a sea change here where we will deploy differently in the Mediterranean up to Turkey, that will deploy differently in the Red Sea and on down to the Indian Ocean? Is it a sea change moment for the Pentagon?
I think what we're relearning learning an old lesson that while you may want to turn your back on the Middle East and you may want to walk away, and we do in many ways, you can't actually do that because we have vital national interests here. We have longstanding friends here, and we're going to have to keep a presence here. Again, I think we trace many of these problems to times when we've let our posture drop too low in the theater, in the region. Our friends are not reassured by that, and our potential adversaries draw confidence when we do that. So is it a sea change? Don't know. Too soon to tell. I will say this. I think that we're seeing right now are appropriate, timely, measured, and I believe they're going to have an effect.
General McKenzie, thank you so much. Frank McKenzie of the Citadel and the Central Command with us today. I'm absolutely fascinated, Manus, of what you say of this, of a larger deployment of America across the sphere you know so well out of Dubai. I can't frame it right now, but
there already is such a
question.
significant, there is already a hugely significant American strategic relationships with a number of these countries. The UAE, the one that I lived in for the past 5-6 years, we were on the verge of something much more significant about American foreign policy as a proper agreement with Saudi Arabia to let them have a proper security guarantee. There's a huge base in Bahrain, Tom. There's huge U.S. military presence right the way across the Gulf.
I didn't get to this because of time, but Manus, let me have you help us with it. The general mentioned the Russian sphere, which to me goes down to Syria and the shore of the Mediterranean. From where you were in Dubai, do the Russians, can they easily expand off of this set of events in the Eastern Mediterranean?
I think anybody who is at loggerheads with the United States vicariously through Ukraine, they're going to seek to take any opportunity then they can to capitalize on that. I mean, I'm not a war strategist, but one can only assume that the United States is now battling Ukraine, Israel, Taiwan, a disarray in Washington. This is a moment of where those who want to do harm will seek to take opportunity, and if Russia can capitalize on that, I would assume they would.
The general alluded to that, to say the least. Again, I must mention as well, Manus Cranny. Look for him in the 5 a.m. hour.
I get up earlier than you, Tom.
Well, 20 minutes earlier. Danny, he slides in at 4:52, folks. With Danny Berger, it's a transatlantic wake-up for the United States, a brief, if you will, early in the morning. Futures improve. We're negative 20-something now, negative 18. The VIX comes in a little bit from 22 almost to 23, 22.15. Right now, I'm going to call it a churning market, looking for a place to go. The 10-year real yield, 2.51%. This morning in the 11 o'clock hour on the airline business, the gentleman from Virgin Atlantic, Shea Weiss, and also Delta's Chief Executive Officer, Ed Bastian, on the turmoil in airlines. Look at those stocks. They're all traveling south. On radio and television, good morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg.
From New York City for our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow on a day when yields reign supreme, climbing. Yields are up, stocks are down. You can see the S&P down 0.4%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up, futures pointing to a fifth day of declines as Treasury yields top 5%. Earnings season in focus with 30% of the S&P reporting this week, and a big deal in big oil. Chevron agreeing to buy Hess for $53 billion. We begin with the big issue. Here comes big tech.
This is an incredibly important week from an earnings perspective.
The magnificence of the big cap tech names.
We're going to be looking for big tech to produce good results.
There's opportunity in technology companies.
You've seen some pricing power in some of the technology sectors.
They're actually experiencing an improvement in financial conditions as interest rates rise.
If you think about the tech group as a whole, AI has been a big driver.
Those companies are extraordinary. Most of them are extraordinary in terms of the quality of their operations, the amount of cash they have.
When you think about future stock upside from here, we are very much focused on that earnings picture.
We're going to be counting on big cap tech and communications to do the heavy lifting.
The economy isn't necessarily the equity market.
We need to be, sensitive to valuation.
It's important to focus on reasonably priced technology.
We need to be very careful about stocks that are sensitive or very sensitive to consumer demand.
It's not so much what's happened, but for me, it's those outlook statements on what consumers are going to be doing.
It's absolutely about the guidance.
This is going to be the make it or break it week at a time when everyone has been focused on yields, and now the pendulum shifts to the big tech names. Joining us now to discuss, Morgan Stanley's Caterina Simonetti and Invesco's Matt Brill. Caterina, I want to start with you. How much could big tech earnings change the narrative at a time when everyone has been so focused on yields and how much they're going to hurt equity valuations?
Well, Lisa, it's an excellent question. We've been watching Magnificent Seven drive the market earlier this year, but the question is, are the earnings in these stocks actually are driven by their competitive positioning and the positive outlook, or by the cost cutting and layoffs, that took place? And that's going to make all the difference in the world. That's what's going to separate, the actual winners and companies that are positioned positively going forward from the ones that have reached significant momentum, but it's not sustainable.
Matt, how much do you view this as kind of a tipping point moment for markets that have otherwise hung in there largely on the heels of these names?
Yeah, I think it's a very big week, and to your point earlier, hopefully it does take everybody's minds off of Treasury yields. So that's what kind of has been on everybody's focus for the last few weeks. And if you can get some good earnings out of the large tech names, I think it's going to get people to calm down a little bit. That at the end of the day, yes, yields are higher. They're probably staying here for longer. But the economy continues to do well, and corporations are making money, which is a decent scenario for credit overall.
Which is a question around how big is the pendulum up versus down if earnings disappoint or if they outperform. Morgan Stanley's Mike Wilson seeing the odds of a year-end rally fading, writing, quote, earning expectations are likely too high for the fourth quarter in 2024, and policy tightening is likely to be felt from both a monetary and fiscal standpoint. Katerina, I know that he is a colleague of yours in terms of the same rubric, the same shop, but from your vantage point, how big is the potential punishment in markets for companies, especially big tech, if they don't outperform, if they give profit guidances that underperform expectations?
Lisa, to your point, our market outlook is extremely cautionary. We believe that the risks in the market are skewed to the negative, and we think that it's important that investors understand it and position their portfolios accordingly. This doesn't by all means it means that they need to sell out of their equity positions or out of their fixed income positions, but defensive positioning, looking at the quality, looking at the defensive sectors like industrials, like energy, like healthcare, that's what's going to make a difference. And also being opportunistic, maybe tax loss harvesting in municipal bonds, corporate bonds, preferreds. This is a unique situation where during this point in the cycle, and our house view is that we're in the late cycle. Usually we see at this moment that rates are skewed to go down, but this higher for longer narrative changed the data set a little bit, and we have to be prepared to be in this environment for longer.
Matt, from your perspective, you said that this is going to be the new normal on some levels, and that because companies have been so strong, they've been able to muddle through. What would change your view that you could potentially see in earnings?
Yeah, so from the economic standpoint as well as the specific on companies, we continue to outperform expectations, and it just continues to go on, and that's why we've been sort of in this feedback loop here of not being able to believe that the Fed might be done. At some point, margin compression has to happen. We haven't seen that yet, so that's something we're looking for. If you start to see companies say we can no longer pass that through to the consumer, or to the client, that's probably good from an overall inflationary standpoint, but it won't be well received by the markets immediately. So that's one of the things we're watching. The bank earnings just finished up, and they were pretty decent. Loan quality still remains good. We all know about commercial real estate and their issues there, but they're reserving for it. And overall, it just feels as if the worst has not hit yet. So we're still relatively optimistic it's going to be a decent quarter for earnings here.
Which is the reason why a lot of people are wondering why yields in the U.S. 10-year topped 5% for the first time today since 2007, whether this is due to the strength that you're seeing underpinning some of these corporate stories, Matt, like you were talking about, or whether there is something else at play. Joining us now to really understand this is Ira Jersey of Bloomberg Intelligence. Ira, is this a technical move that you feel in yields climbing to the highest levels going back to 2007?
Well, it's certainly partly technical, partly on the idea that supply is going to continue to be a strain. But the single biggest thing is the global central bank environment, in my view. Number one is you think about what we were pricing for the yields to be in 2025 and where the policy rate was going to be in 2025. It was 2.5%. It's now 4%. So we had to reprice 5-year notes, 10-year notes, and even the long bond to reflect that less easy monetary policy going forward, number one. And number two, it's the global aspect of this. One of the reasons we've sold off overnight in the U.S. was the headlines that Japan may, again, ease its yield curve control targets. So that means that, yields in Japan wind up selling off, followed by Europe, and the U.S. just has to follow because it is one of the more liquid government bond markets in the world.
Do you start to see buyers come in at this point, Ira? We had a number of guests earlier this morning who seemed to suddenly like treasuries a whole lot more here, including BlackRock.
Well, I think treasuries and certain parts of the treasury curve offer an interesting dynamic because if you go out and buy a 5-year note right now, it means that it's hard to lose money in a 5-year note unless you think yields are going to go up another 300 or 350 basis points, which means, going back to like early 1980 type of levels for those yields. So I think the risk reward is getting more and more skewed toward being long. I think the problem is convincing people in a bear market, do I try to catch the falling knife? Do I try to catch the bottom? A lot of people had been long thinking, oh, when the Federal Reserve and other central banks stop their hiking cycles, it's time to buy duration and get long. And they've been burned now by, by at least 4 or 5 points in terms of the 10-year bond price going down. So I think it'll take a little bit more time. And 5% is not really an important technical level. 5.3% is pretty important here because that was a yield high from 2006-07 time period. So we could sell off a little bit more before we start to see a little bit of capitulation.
Ira Jersey, thank you so much. Matt Brill and Caterina Simonetti still with us. Matt, are you looking to buy at 5.3%? You holding off until they're on the 10-year?
Well, I think Ira nailed it. I mean, you talked to so many clients that they were attracted to yields at 4.30, and we saw massive inflows at 4.30, and it felt as if this was going to be just a fantastic environment for risk taking, and just inflows in general were really, really good. And then when we broke out of that current range to the 5%, everybody's just paused. And so, I think there's no doubt that things are cheap. There's two kind of things we were looking for, kind of check the box, if you will. One was 5%. The other is a flat to positive sloped yield curve. And so we're at, call it, minus 15, minus 14 on 2s, 10s. So we're close there, but not all the way there. So we're kind of at the point where we're just saying, look, we think it's cheap. We think the economy is slowing. It's not slowing quick enough. But, it's been tough because you've been burned a lot of times here. So the confidence is certainly low, but the valuations appear to be there.
Matt, and I'm going to get to Caterina in a second, but Matt, are you concerned that we're starting to see signs that credit, I don't want to say is cracking, but at least credit spreads are widening. They're starting to at least respond to the idea that borrowing costs are increasing as much as they have.
Yeah, in the last week, we did move about 6 or 7 basis points in credit spreads, which was kind of out of the tighter end of the range there. We were down 2% in total return, which is a really, really vicious minus for the week. Takes us negative for the year now. And I think, when you look at credit spreads, they're still kind of in the median range. I would simply point that good companies don't default because the economy is too good. So I'm still not worried in that regard. And if you look at regional bank spreads, they were wider last week, but you're not looking at jump to default risk. So I still think that this is just more of an adjustment rather than a panic move out of the credit market. So, again, we're looking for rate stability. And when we get it, we do think that you're going to be looking at very, very attractive yields, which are going to be met with buyers.
Caterina, does it make you nervous that Treasuries are not acting as a haven right now, as they normally would and should, that the sell-off has persisted for far longer than anyone had imagined?
Well, it certainly raises an element of concern, but at the same time, the higher interest rate environment is a positive for individual investors. This is where, investors that are uncomfortable with this market, that, are looking at all the economic risks and geopolitical risks and the inflation that is not quite at the desired level of 2% yet, they have ability to go to cash, to private credit, to bonds, and actually enjoy higher interest rates, at least for quite some time. I mean, it will require some strategy to make sure that, these rates actually, last, and, portfolio design techniques that will ensure that longevity, but that's the advantage in this market. That coupled with dividends and quality, and to Matt's point, this is where scale and quality matters more than ever before. We need to be looking for healthy balance sheets and, take advantage of this market. But will investors be comfortable, quite buying at this level, or pulling the bottom? That remains to be seen.
Just quickly, Caterina, have you been buying more treasuries recently just simply because these yields are too good to pass up?
Absolutely. We've seen more treasuries as a part of the fixed income portfolios than ever before, because it's undoubtable that, the rate environment is here and investors want high quality credit in their portfolios. And that's where treasuries play a role. We just have to have a longer term outlook, when it comes to the interest rates at the moment.
Caterina Simonetti and Matt Brill, both of you are sticking with us. Let's take a look at some of the stocks moving ahead of the opening bell. Abigail Doolittle joining us now. Abby.
Well, excuse me, Lisa. We are looking at a bit of a bearish open, as you know, heading to a 5th down day in a row for the S&P 500. One stock that's dragging, of course, Chevron. This on the $53 billion buy of Hess, the second mega oil deal in just a few weeks. That, of course, is $171 per share. And what this gives Chevron is Hess's big presence in Guyana, plus more fast production. Okta is plunging down 7.4% on a second major breach of of the company's identity verification system in about 2 years. Analysts are saying that this could hurt sales and that it could really be a problem for their pipeline. Then to the upside, it's interesting, Lisa, because we do have Bitcoin trading back above $30,000 per Bitcoin, now up about 85% on the year. This is helping out a lot of the Bitcoin-related names, such as Riot Platforms, up 3.7%. This maybe is a haven bid, but with Bitcoin up 85% on the year and Riot up 160% into today, I'm not sure that that really fits the traditional definition of a haven bid, but certainly higher.
Abigail, thank you so much. Coming up, the U.S. intensifying efforts to prevent a wider conflict in the Middle East.
We expect that there's a likelihood of escalation by Iranian proxies directed against our forces, directed against our personnel. We are taking steps to make sure that we can effectively defend our people and respond decisively if we need to.
From Tel Aviv to Washington, D.C., our team coverage on that continues next.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
We expect that there's a likelihood of escalation by Iranian proxies directed against our forces, directed against our personnel. We are taking steps to make sure that we can effectively defend our people and respond decisively if we need to. This is not what we want, not what we're looking for. We don't want escalation.
Western leaders ramping up efforts to keep the Israel-Hamas war from escalating. Additional aid expected to enter southern Gaza after 2 convoys arrived over the weekend. President Biden promising, quote, a continued flow of critical aid to Palestinians in need. EU leaders also lending their support, saying they'll endorse the UN's call for a humanitarian pause to allow for the distribution of aid. Let's get to our team coverage for more information. Bloomberg's Oliver Cook joining us from Tel Aviv, Anne-Marie Hordern in Washington, D.C. Anne-Marie, I want to start with you. It seemed like all of the officials were out in force in the Sunday talk shows with a different tone, talking about U.S. military representatives who are increasingly under attack in the Middle East. Can you explain the shift in tone on that front?
Yes, and we also saw a statement over the weekend from Secretary of Defense Lloyd Austin about how the U.S. is changing its posture in the region. One, it's moving one of the aircraft carriers. They did move to the Eastern Mediterranean, closer to the command center. They are also moving some Patriot missiles, as well as putting on alert a number of troops for potential deployment. Now, they're just on alert, but this is, you can see the U.S. changing how it's viewing this conflict in the Middle East. And one of the biggest takeaways over the weekend, whether or not it's on the Sunday talk shows or the fact that the president got on a number of phone calls, not just with Prime Minister of Israel, Benjamin Netanyahu, but with the leaders of Canada, France, United Kingdom, Italy, Germany, is that they want to make sure that they can contain this, Lisa. They do not want to see this conflict metastasize throughout the region.
Ali, how much are the Benjamin Netanyahus and his entire cabinet listening to all of the international influence that's being pressured on as Biden comes there, as you see other leaders also join forces in Tel Aviv?
Listen, I think it's difficult to tell. I think, though, it would be naive not to realize the importance that the United States is playing here for Israel as an ally and as a support politically, militarily, and financially. And so as a result, that will certainly get them some influence. It got them certainly in the room in those meetings with the War Cabinet when Biden was here with Antony Blinken, with the National Security Advisors. So I think that certainly he's going to be a part of that conversation. I mean, we had it reported in Israeli media here that we have not confirmed, but that the defense minister, when talking to the Knesset, was saying that we can't very well just tell the Americans, you know, we're not interested. And this was in regard to aid and trying to get aid into Gaza. And we understand today, again, from Egyptian media, something that we've seen has been very difficult to track what's going on in Rafah, that there is more aid potentially already now flowing into Gaza, which would be another relief. But again, as we've been talking about, a drop in the bucket for what is really needed right now in the humanitarian situation.
A really complicated situation. Ali and Marie, both of you, thank you so much for the updates. We'll be speaking with you throughout the day and week and weeks to come. So with us, Katerina Simonetti and Matt Brill, as we try to understand where markets are most vulnerable at a moment of fraught tensions in the Middle East. And I want to start with you, Katerina. How much are you watching the price of oil and just what the percentage risks are that are being priced in? It's something that you cannot game out, that no one knows how it's going to end.
Well, you know, we watch it all the time. And so our investors and our clients, you know, these are the phone calls that, you know, we feel daily because the geopolitical risk like this, you know, they make investors really uneasy. And if you couple them with the inflation and high interest rate environment and the fact that the dollar is strong, which makes it really difficult for our multinational companies to be profitable. And now this conflict in Middle East and what that means for that the price of oil are going to stay higher for longer. And there isn't obvious positive catalyst for this market. And therefore, you know, this narrative that we have about staying defensive and looking at industrials and looking at oil stocks, you know, in healthcare stocks and just general defensive areas, including consumer staples, which tend to do well, you know, when economy is not performing quite as positively as expected. So absolutely, prices of oil are going to have a huge impact on investor behavior, at least for the end of this year.
So that's the pessimistic side of things, saying it's hard to see the upside catalyst for this market. Matt Brill is a bit more optimistic. But Matt, how do you take a look at the extra uncertainty added to the overall toxic brew that we've been seeing of different developments and still remain positive, still remain constructive on growth, even in the face of potentially higher oil prices?
Yeah, I think you know, the market's sort of been conditioned to take this at this point. So, you know, a year ago you had, you know, the Russian-Ukraine situation occur, and market kind of went through the higher oil prices there and adjusted, and the consumer kind of fought through it. And then again, this is the resiliency of the consumer, you know, primarily in the U.S., but globally continues to be the dominant theme of this economy. And so, you know, this situation there, you know, as tragic as it is, I don't necessarily think that it's going to continue to you know, be the final thing that derails the U.S. consumer. So if you look at oil prices are down today. So I think there's a little bit of just with some level of calmness or a little bit more of discussions that are occurring there is leading to maybe some hope that this won't be spread as widely. If you can get that to happen, we should be fine from a U.S. economic standpoint. So overall, that's the look-through scenario, because we did it again last year, and so I think that's maybe where we are again this year as well.
Matt, are you actually going increasingly risk on as an increasing number of your peers go risk off?
So I am not risk on over the next week to month, but I do think we're setting up for a scenario that is very risk on for credit for 2024. And the reason is because of higher yields, it's forcing companies to not want to borrow. And there is going to be a massive reduction of supply in the credit markets in 2024. So while the Treasury is printing a lot of bonds, corporations are not. Banks are printing a lot of bonds, but industrials are not printing bonds really at all. We had $1 billion last week. We're probably going to be down 25% in industrial supply in 2024. So that's a good technical, but it's also a good fundamental. And if you look at the Chevron Hess deal today, I will point out it's all stock. Why is it all stock? Because it's expensive to borrow. And so corporations are going to continue to improve their balance sheet, and I think they will do it at a faster pace than the economy is going to decelerate, which is what makes me bullish over the longer term, but a little bit cautious over the near term.
Matt Brill, Caterina Simonetti, thank you both so much for being with us today. Coming up, the morning calls and later, 4 of Big Tech's Magnificent 7 reporting earnings this week. We'll look ahead to the results with Keith Lerner of Truist.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
This is Countdown to the Open. I'm Lisa Abramos in for Jonathan Farrow. Time now for the morning movers. First up, JP Morgan upgrading Walgreens Boots Alliance to overweight, highlighting the company's new management team and improving free cash flow. Next up, Stifel upgrading Pinterest to buy, seeing plenty of room for growth outside the company's domestic market. And finally, Piper Sandler downgrading Salesforce to neutral, warning that consensus growth estimates appear to be overly optimistic. Coming up, big tech earnings taking center stage. We are going to take a look at that weakness that is perpetuated in markets. Ahead of that, we're going to be speaking with Keith Lerner of Truist.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
The markets are on the move.
The focus, of course, is on Ukraine.
The market is so hyped up about AI.
Unless we see dramatic changes, it's just going to keep getting hotter.
For further market analysis, we're going to go get straight to some breaking news. We'll have a full roundup.
Going through some of the numbers and what investors should make of them.
We have so many important conversations. Let's check in what you need to know.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday. This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow, just moments away from the start of trading, and you can see that softness continuing as the session grows older. S&P futures lower by 0.4%. NASDAQ down about the same. The action has been in the bond market, particularly with yields crossing the 5% level for the first time going back to 2007. One sector to watch at the open is energy, with Merger Monday in full effect. Chevron agreeing to buy Hess for $53 billion. Chevron CEO Mike Wirth saying, quote, "This combination positions us to strengthen our long-term performance and further enhance our advantage portfolio." We've been seeing oil prices a little bit lower, but otherwise rising. Joining us now to talk through this deal is Abigail Doolittle. Abby.
Well, Lisa, this isn't just the only big deal that we've seen in the oil space recently. Of course, ExxonMobil recently bought Pioneer Natural for about $59.5 billion. And right now we have Chevron trading lower. Hess has just flipped higher on this $53 billion deal, or that amounts to $171 per share in an all-stock deal. So not quite at that purchase price, suggesting that some investors think that there could be some hurdles ahead to getting this deal done. But Chevron is, of course, the second biggest oil and gas producer, U.S. gas and oil producer behind ExxonMobil. And at a minimum, this deal should keep them in that position. Now, what it really gives them is a bigger presence in Guyana. The South American country is now one of the new big oil producers on the global scene, and it will give them 30% ownership of more than 11 billion barrels equivalent of recoverable resources in Guyana. With the ExxonMobil and this deal, it solidifies, Lisa, the U.S.'s position as one of the largest oil and gas producers in the world among some of the other big European and, of course, Middle East companies. Hess not quite again, and now it's flipping lower, Lisa, at that $171 billion. That really stands out. That was the case also with ExxonMobil and Pioneer. It's going to be interesting to see whether or not there are hurdles, such as regulation. If you recall earlier this year, the White House had pretty strong words around oil being higher and hitting consumers.
Yeah, how much is going to be an antitrust or regulatory overhang? Abigail, thank you so much. So many questions, including why now and who's next and what's underpinning some of these transactions. 10:30 a.m. You can get all of those questions answered. Alex Steele is sitting down with both Chevron and Hess CEOs, Mike Wirth and John Hess. That interview coming up at 10:30 a.m. Eastern, and maybe they can ask about that Hess truck that Tom Keene is still lamenting he didn't get as a child. Sticking with M&A, some potential news out of the media space. Disney said to be nearing a multi-billion-dollar deal to sell a controlling stake of its India operations to Reliance. A spokesperson writing, quote, "We continue to evaluate various opportunities on an ongoing basis." Simone Foxman has more. Simone?
Yeah, Lisa, this has to do with Disney's Star unit in India. Sources tell us that Reliance may merge some of its units into the Disney Star, provided this transaction goes through. One big issue, though, there's a discrepancy in what each company believes this should be valued. Disney, we understand from sources, values it around $10 billion, whereas Reliance sees something like $7 to $8 billion. Interestingly, this has to do with a controlling stake in this Disney Star unit, not sort of the piecemeal transactions that were potentially considered before. Disney, therefore, likely to continue owning a minority stake. We should caveat that no decision has been made yet, or on any deal or on any valuation. We did first report in July that Disney was weighing options for this unit amid intensifying competition in India. Clearly, one of those major rivals is Reliance, which is owned by Mukesh Ambani, India's richest man. They signed a pact for Warner Brothers Discovery in April for some of their streaming content, and beat Disney out for streaming rights to the Indian Premier League cricket tournament in 2022 for $2.7 billion. But Disney still has a big role in this space, drew a record 43 million viewers to the Cricket World Cup, which it has rights for on Sunday. So we'll see if we can bridge the divide here, and maybe part of that divide is what we're seeing reflected in the share price. Disney shares down over 1%, Lisa.
Simone, thank you so much. Let's take a look at the auto sector. Shares of Tesla extending their losses after recording their biggest weekly decline of the year. The electric vehicle maker expecting its capital expenditures to top $9 billion this year, writing, quote, "Our CapEx is typically difficult to project and could be impacted by uncertainties in future global market conditions." Isabel Lee here to translate what that all-encompassing comment really means. Isabel.
Hey, Lisa. So this is an increase from the expected CapEx Tesla announced in January this year, which fell around the $6 billion to the $8 billion range. And now it's saying it'll exceed $9 billion. So the company maintained its forecast of $7 billion to $9 billion in the next 2 years. So this is the second time in 9 months that Tesla has increased its forecast. And Tesla shares hit session lows earlier in pre-market trading, and it's now down by almost 3%, but still up around 70% year to date. So the move comes as Tesla ramps up its factory reopenings and also its rollout of its new models. So this includes the shipment of its revamped Model 3 compact sedan and the Blade Runner-inspired Cybertruck. So they're expecting it in the last 3 months of the year. So Elon Musk has said the company was also hesitating to open a factory in Mexico due to the uncertainties in the economic outlook. And Musk also warned that rising interest rates could hurt consumer appetite. Lisa.
Isabel, thank you so much. Turning now to tech, it's a big week for earnings for the sector. Even with Treasury yields putting more pressure, there is a question of whether they can continue to outperform. Katie Greifeld has more on that. Katie.
Hey, Lisa. Yeah, welcome to the biggest week of earnings. Nearly $16 trillion worth of S&P 500 market cap reports this week. Headlined, of course, by big tech. We're talking about the likes of Google, Microsoft, Meta, and Amazon, to name a few here. Now, obviously, these companies take the stage against a pretty difficult backdrop, if you can call it that. The S&P 500's third quarter EPS growth overall is seen slipping 1%. The tech sector in particular is seen growing by just 4.4%. And obviously for these big tech names, the focus will be on artificial intelligence, how much companies are spending to realize that promise and when that will actually be monetized. And then, like you mentioned, obviously the cross-asset backdrop. Lisa, I think you were already on air, but the news I woke up to was 10-year Treasury yields breaking 5%. That's obviously created a lot of competition for capital. If you compare the S&P 500 versus the 10-year Treasury yield, that 10-year yield is now just about even with the S&P 500's forward earnings yield. So obviously just amping up pressure on equities overall.
Katie, thank you so much. And that was the theme this morning with a number of different investors, including BlackRock's Wei Li, saying it is time to maybe not be short duration, but actually at least be neutral. Someone else who is aggressively neutral is Keith Lerner of Truist, who is expecting a more volatile equity market until there's some stability within interest rates, writing, quote, "We remain strongly neutral across stocks, bonds, and cash, given the market cross-currents." Keith Lerner joining us now with more. But Keith, I want to start with what would make you less aggressively neutral? Are you starting to see the yields that can make you a little bit more comfortable with going into some of the longer duration bonds?
Yeah, well, great to be with you, Lisa. I don't know if I'm going to use the word comfortable with anything in this market right now, but the first thing I do when I wake up in the morning and to get a barometer on the markets is look at the 10-year, and we know the 10 years, kind of breaching this 5% level. I will say this, Lisa, and we talked about this last month. I mean, as we approach this kind of 5 to 5.25, We're reaching the highs from 2007. Real yields or inflation-adjusted yields are also around 250. That's kind of where the top was close to in 2006 to 2007. So, listen, not to try to be a hero, but I do think that as we kind of hit these areas, that there will be some more buyers stepping in. And if we step in and we just see yields stabilize, I think that will be enough to actually also see equities rebound. So instead of this case where stocks and bonds are falling together, they'll likely move up together. Again, as you mentioned, this is a big week for earnings as well.
Well, let's talk about that, because at some point we've got to get off bonds, right? I mean, I feel like every morning we wake up and we quote the 10-year, and then we keep quoting it throughout the morning, and that's what we do. We wake up and repeat it again tomorrow. At what point do earnings take the narrative over and say, hey, look at these big companies with cash performances that are just tremendous, that are continuing to consolidate market share, even perhaps at the expense of all the smaller ones. Let's buy them, even though they're up, 150% if you take a look at Meta so far this year.
Yeah, I think that's fair. I think one thing that's being overlooked right now, it's ironic that that the equity market's weakness is because the economy is too strong as opposed to too weak, which was the kind of the consensus coming into this year. And what's being overlooked right now, because of that strong economy, we just had for the S&P 500 forward 12-month earning estimates hit a record high. So again, I think that's being somewhat overlooked because there's so much attention on the 10-year. In our view, really just that stabilization would be enough if we stabilize in the 10-year to refocus on earnings. And the other thing is, we just did a note this morning and we looked back at, what was the average 10-year yield from 1950 to 2007, right? The pre-global financial crisis. The 10-year averaged about 6%. Cash yields were around 5%. And the total return for the S&P averaged above 11%. So stocks can do fine in that environment, but it's the adjustment process. And the challenge right now that makes it a bit more challenging is how quickly we've moved up. So we just need, again, a little bit of stabilization. I think they'll be refocused. And on the margin, as we pull back within that strongly or aggressively neutral that you said, we're becoming a little bit more positive because at least you're reflecting some of these market uncertainties that's right in front of us.
All right, Keith, I've been wondering this for a long time. If you are strongly neutral, does that mean that you wake up every day, you look at the 10-year, you see if it's moved by more than 6 basis points? If it has, you roll over and you go back to sleep. Is that essentially what this means, or are you adjusting in real time around the different earnings that come out as well as readjusting to try to capture some of the yield?
I might disappoint you, but no, we're not adjusting tick by tick. I mean, our tactical time frame is 6 to 18 months, basically. So we want to see something meaningful with that. We think there could be outperformance over a period of time. But where we really have focus, so yes, we're more neutral with stocks versus cash versus bonds, but we've been making big bets within asset classes. We've been Team USA all year. Look at the U.S. spread relative to international markets, especially emerging markets where we remain negative and we have zero allocation in our portfolio. So that's a way to pick up some, relative performance. We still think large caps over small caps make sense, not only because of what you just mentioned on kind of the tech earnings, but small caps have a lot more floating rate debt. They're much more sensitive to these higher rates, so and the business cycle is working against them. So I do think there's opportunities there. And another market where you focus a lot, Lisa, we're starting to see those credit spreads start to creep higher. We do not think this is the time to take on credit risk. We would stay high quality, and again, start leaning into that 10-year without trying to call the top.
Right now, we're just definitely watching also specific sectors, including oil. And this morning, we did see Chevron announcing an all-stock acquisition of Hess. How are you playing the discussion that people keep having that there's going to be much more consolidation in this sector, especially at a time when it's about maximizing the profits out of the ground before people don't want it?
Yeah, well, listen, I just think in general, the energy sector is a good hedge in this market. We are overweight the energy sector. And the way to think about it is this. I mean, I think the lower end of the oil prices is higher than what it was. These companies are generating huge cash flow. And I think even today, the story with Chevron is a cash flow story. So they're one of the cheapest sectors in the market, and we're also seeing a lot of positive earnings momentum. So I would say, stay overweight energy. It's a good overall hedge, and I think the fundamental story is still positive, not just for this year, but it's a multi-year story.
When we talk about earnings, the fact that $15 trillion worth of market cap is going to be reporting this week, how much are you watching the underperformances and how punished they are by the market? By one measure, the disappointments were met with the biggest sell-offs going back since 2019 so far in the earnings cycle. Does that tell you something?
Well, it's a negative, right? And the other thing we're seeing is on top of that, even positive earnings have not been received well. So I think in some ways you could say, well, maybe all the good news is baked into stocks, and therefore they're looking ahead to a slower economy. And I think that's potentially true, but I think more likely is that during this earnings season, we've seen the 10-year move up so rapidly that people are just dismissing the earnings in totality, both positive surprises and, as you mentioned, even hitting the smaller companies more. So again, I'd like to see stocks react better to positive news, but I think that 10-year is really what's driving things more than the actual earnings today.
It sounds like we're going to have to wake up every day, look at the 10-year, see how much it's moving, and then determine whether or not to get back into bed. Keith Lerner, you're going to be sticking with us. Thank you. Coming up, House Republicans entering another week without a speaker.
This is not a time to play games. This is embarrassing for the Republican Party. It's embarrassing for the nation, and we need to look at one another and solve the problem.
The race for House Speaker heating up as 9 candidates start campaigning. That conversation coming up next.
Names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
I know one of the reasons you're here in Marrakesh and in Africa, because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. What will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, all the tech which is moving our world on from having to rely on dinosaur era fossil deposits of oil, coal, and gas to simply today's era of machines which make machines to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times. Those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
I would have hoped that everyone would come together with their put the country before the politics and actually solve this. Steve Scalise would have done an excellent job. I supported him. Jim Jordan would have. I just know this is not a time to play games. This is embarrassing for the Republican Party. It's embarrassing for the nation, and we need to look at one another and solve the problem.
Former House Speaker Kevin McCarthy weighing in on party divisions as the speakership contest drags on and on and on. House Republicans turning to Washington, signaling what may be a drawn-out vote to fill the vacancy this week. A GOP candidate forum is scheduled for 6:30 p.m. The party is expected to start the election process tomorrow with 9 potential candidates. The lack of leadership leaving the House's fiscal priorities on pause, stranding bills for aid to Israel and Ukraine as a possible government shutdown looms in mid-November. Covering the circus is our own Anne-Marie Herdern in Washington, D.C. Anne-Marie, it seems like this is becoming incredibly unpopular. There was a USA Today Suffolk University poll that found 2-to-1 Americans are telling Congress to cut it out. They are sick of this. Why is there not some sort of response in the House?
Well, yeah, it's quite chaotic. It's the 20th day in Washington where we don't have a Speaker of the House of Representatives. It's really unprecedented, uncharted territory. And now what you see is a 9-man race. And, you know, Lisa, there's names on here that people will be familiar with, like Tom Emmer. He's the current whip and part of the leadership. There's Representative Mike Johnson, who's the vice chairman of the House Republican Conference. But then there's another new fresh faces in this list, and potentially those individuals will have a chance tonight to make their case in this internal forum behind the scenes, right directly to the caucus. And then potentially tomorrow, we will get a nominee. But the issue still remains. Can any one of these men get to 217 on the House floor? One analyst at Cook Political Report said the best person that has the best chance of getting to 217 is someone who hasn't been around long enough to tick off more than 4 members of his colleagues.
Which gives you a sense of just where we are right now. It feels a bit like junior high school. Anne-Marie, at a certain point, are they getting the sense of urgency that a lot of people are feeling outside of Washington, D.C. with some of the budget requests and with the government shutdown looming?
The closer we get to November 17th, that is where there is going to be this pressure point where they're going to have to act. Potentially at that point, we could see this idea that was floating around last week that then got killed very quickly. But potentially, if you come to that point and there's still no Speaker of the House, there could potentially be a vote to give more powers to the current Speaker pro tem, Patrick McHenry, to get on with the legislative process. But that's not going to be an individual that potentially could remain Speaker for next year, or maybe that individual can, or we could see the Democrats really come to play, and there want to be some sort of power sharing. The issue with that is that'll be very difficult for Republican when you think about the fact that they have an election next November.
Anne-Marie, thank you so much. We keep catching up with you on this issue. Pangea's Terry Haynes weighing in on how the race for speakership could unfold.
What you'll end up with is a situation where Congress, and I think principally the Senate, is going to make a decision on the amount of both aid. I do think in the end you will see something close to what Biden is asking for, but also it's going to take a couple of months to get there. And for both geopolitics and for the markets, that's going to seem way too long.
Keith Lerner, still with us, reeling as he tries to parse through this all and figure out how to factor it into an investment thesis. Keith, how do you put this all together?
You know, I call it the carousel of concerns. You call it the circus. I mean, there's so many different things, you know, but I also say there's a high price for certainty. You know, when everything is worked out, I mean, typically markets rebound. So in some ways, at least the markets reset a bit. You look at the S&P 500. We know valuations are not cheap, but they're down to about 17.5. You'd strip out that magnificent 7, you're around 15.5. Stocks are, you know, somewhat oversold, and sentiment is pretty negative. So if yields come down, if we actually have something that moves forward in Congress, if oil prices stabilize, I mean, these are all things that also can be energy for the market, no pun intended. But, you know, as far as, you know, catalysts, you actually, you know, you have a lot of negativity. You just need 1 or 2 things to break right to actually have some type of rebound. And I will say, for what it's worth, as we move out of this month, November and December tends to be a much more positive seasonal period for the equity markets.
What you just said there was very interesting to me, Keith. Basically, there is an implication that the negativity, the wall of worry that we're talking about right now, is priced in on some level, that it's actually acting as a damper to valuations and to risk appetite. Is that your view, that you think that it actually is being priced into markets that other people say have been relatively sanguine?
You know, it's interesting because if you look at the S&P 500 itself, I mean, we're down 8%. That's not too much, but look below the surface. You're at a 52-week low for small caps. They're down 15, 16%. You have some of the more interest rate sensitive areas like utilities and real estate down over 20%. The average stock down 13. So, yes, I think, is it fully priced in? And is all the bad news? You know, I don't know the answer to that, but I will say or at least better reflecting some of these known uncertainties that we're talking about every day. And also, as you mentioned, is the 10-year. So in some ways, I think that is a incremental positive in a sea of gloom.
Just to cap this off, if there is a House Speaker elected and there is a sense that the U.S. government is not going to shut down, do you go out and buy equities?
I don't think that's the main reason why the market's down right now. I think the main reason that the market's down is the 10-year. So I would say this, I would be leaning in, if you're underweight equities, I would be leaning in now more towards a neutral allocation, as you said, but a lot of folks still have a lot of cash. I would use that as an opportunity. And if the 10-year comes down, even 20 basis points, 30 basis points, that could be enough for the market to move higher. And maybe the last point, Lisa, is something that you focus on a lot. If the 10-year Treasury, going back to fixed income, goes up 50 basis points, the total return on a 12-month basis for high-quality bonds will still actually be positive because that coupon carry. If you go down 50 basis points, you're up about 8% on a total return basis.
Keith Lerner, thank you so much. We'll carry that conversation forward. Coming up on the market-moving events that you need to be watching. That's next in our trading diary. And if you take a look at 10-year yields, the buyers have come in down aggressively from where they were before. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
This is Bloomberg.
Time now for the trading diary. We need to be watching this week. President Biden discussing Bidenomics at 2:30 Eastern. Then House Republicans holding a forum for their speakership candidates. That's at 6:30 p.m. On Tuesday, big tech earnings kick off with Alphabet and Microsoft. We get Meta results on Wednesday, followed by Amazon on Thursday. And finally, on Thursday as well, we get an ECB rate decision and U.S. GDP figures. Right now in markets, you can see that 10-year yield that got to 5% earlier back down to 4.94%, aggressive rally lower as people take a look at what they can get for the first time since 2007. This was Countdown to the Open. This is Bloomberg.
crucially important. And I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong? Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're going to get the latest on the situation in Israel today. We're going to have Ambassador Elon Pincus, former Israel General Counsel in New York, former Chief of Staff to two foreign ministers. This person will really have the latest on what is happening in Israel. And then we're going to check in with Fernando Valle, Senior Energy Analyst at Bloomberg Intelligence. He's going to help us break down this big deal in the oil space. Chevron buying Hess and Hess Trucks. That's big news. The second big deal we've seen in the energy space just in the last couple of weeks. We'll get the latest there. But first, let's kick things off today with Mr. John Tucker on our Bloomberg Business Flash.
Yeah, we have to ask, are they still going to make the Hess trucks?
That's
the
Alex,
important part of
Alex
this.
Steele is interviewing the CEOs of both companies.
That's her first
I
question.
put that on the list for her.
The S&P 500 lower, now hovering around 4,200. And like you say, deal news, Chevron buying Hess, $53 billion, the price tag. Roche will pay $7.1 billion to acquire Televant Holdings. We'll have more of that in just a moment. 10-year Treasury yield crossing 5% for the first time in 16 years, has pulled back just a bit, up 1 basis point right now, back to 493. Economist Dennis Gartman says, the movement in yields does not bode well for this economy.
There's almost no question we're going to get a recession. It's just a matter of when. And the fact that the yield curve is beginning to disinvert, that short rates are coming down just a tad, long rates are going higher. Historically, that's been the calling card for a recession.
Right now, 8 of the 11 major industry groups in the S&P 500, they are lower. The biggest drag, that's coming from energy and consumer discretionary. The best performers right now, industrials, healthcare, and communication services. More data later. The Commerce Department's going to report on third quarter economic growth this week. Economists forecasting solid advance in Thursday's GDP data. Right now, the S&P 500 just 9 points lower. That's down 0.2%. 42.15 for you chart watchers. The Dow Jones Industrial Average is down 69 points. The NASDAQ 100 38 points lower. That is down right now 0.25%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well, so head over to youtube.com and search Global Radio. Matt, I didn't really mean for you to take off your hat.
Search Bloomberg Radio.
Bloomberg Radio, thank you. Matt walked in here today with the Ducati hat. And I said, maybe in the interest of putting on a professional YouTube broadcast, we might want to think about doffing that hat.
I just want to point out
because
Ducati had an amazing weekend.
Okay, what happened?
1, 2, and 3 in the Phillip Island MotoGP. So MotoGP, for those who don't know, is the pinnacle of motorcycle racing. No, 300 million people watch every weekend. It's not quite as popular as Formula One globally, but it's about half of that. And there have been 2 historic races in the past 2 weeks. Last week, I won't spoil it. I don't want to spoil it if you haven't watched it yet.
I'm not sure. I don't think too many of our audience.
All right.
Last week,
go ahead, spoil it.
Last week, Pecco Bagnaia, who is the Ducati factory, the lead Ducati factory pilot, came from 13th on the grid to win the race. Wow. That hasn't happened in like 17 years, somebody coming from that far back, because that's the 4th row of the grid. And then this week, Johan Zarco, a French rider who's been competitive for years and years, but he's never won his first GP, which was pretty amazing. Plus, Pecco took 2nd, and then Fabio Di Gianantonio, who has lost his seat for the season, was 3rd. So he came in on the podium. Like, it was an amazing race.
Sick. I can't believe I didn't see that this weekend in television with my college and professional football.
Guys, I'm going to highly recommend. Okay,
World Series baseball.
I heard Ohio State won.
Yeah, Ohio State won.
So I get $20 from Dan.
Okay.
We put a bet on that.
Okay.
But I mean, it doesn't matter to me as much as MotoGP because this is a truly global sport. It's truly a race of champions.
Yeah.
These guys do superhuman things.
It's amazing. It's amazing.
And MotoGP.com. I recommend people subscribe and watch MotoGP.com.
And you own a Ducati, we've established.
I have a few Ducatis.
All right, Bailey, save us here from this. Bailey Listropes covers the markets here. Another red day out there. People selling. It's tough for the stocks to work when you got 5% on a 10-year. So what are you seeing out there?
Yeah, it's tough, and I think this would mark the first red Monday in more than 15 weeks, or 15. We're on 15 consecutive Mondays trading higher. Notable underperformer, FMC Corp. For Matt, ticker is FMC. Agricultural company down as much as 26%, biggest drop since March 2020, cutting its expectations for the year. That's leading to peers like Nutrien, Mosaic Company, CF Industries, all to underperform the market this morning. But as JT mentioned, a bit of a merger Monday. Chevron buying Hess for $53 billion. Engage Smart going to be taken private by Vista Equity, ticker ESMT, in a $4 billion deal. And Roche acquiring Televant, Roche ADR's RHHBY. Televant is actually held by Roivant, ticker ROIV, and Pfizer, ticker PFE, in a deal that is $7 billion. A lot of letters, a lot of money.
And it's Merger Monday again here. And, again, when I see mergers, it tells me that management teams, boards of directors, they're confident about the future.
When's the last time you saw a merger, dude?
Yeah, no, this has been a bad year. But
never.
I'm saying
never, because there's no such thing as a merger.
Yes, okay, very good.
You see acquisitions.
I prefer to represent the seller because I make a bigger fee.
Okay, so you see sales.
Yeah, yes, there you go. Deals. But again, I guess we're seeing some deals in the energy spot. You always see stuff in healthcare. I don't know.
Energy and healthcare. Ben Cent, who's the man out in London, I believe now, writing an article, Bankers see busiest M&A month in years in $140 billion deal spree. So October busiest for U.S. public takeover since June 2019. Obviously coming on the heels of the Exxon deal, I think 2 weeks ago, and you have a number of other deals that are in the works. So it does seem like, yeah, Exxon's $60 billion takeover of Pioneer about 2 weeks ago, and there does seem to be more deals in the works, whether it's in biotech or in energy. The two areas, at least as someone who covers the IPO market, that we're seeing interest, we're seeing deals getting done.
Well,
so
and also in Paul's revere here, because Disney is nearing a big asset sale to Reliant in India, and that's said to be about $7 or $8 billion. So a big deal for the House of Mouse
what happened
as well.
in their star business in India? They lost the rights to Indian cricket. And so that was it. I mean, that's so much value. And they're like, well, I don't want to own this thing if we don't have cricket.
Well, that reminds me, that takes me back, throwback to when I was at Syracuse
It's almost
University.
like the MotoGP.
I was going to
That's how
say,
big it is.
well, you know what? They just had their race in India a couple of weeks ago, and that's a huge market for them as well. And we joke because Americans don't watch MotoGP for the most part.
Right.
But in India, it's huge. In Indonesia, it's gigantic.
All you need, though, is to get a Netflix special. That's kind of been the Formula One thing. If you get Netflix to get people to watch it and stream it, they're going to start caring, at least in some way, shape, or form.
All right, good stuff. What else is out there?
Looking at some of the other underperformers, Revolution Medicine, ticker RVMD, because I always love to bring up smaller biotechs. Right now, just under $2 billion, down 40% after underwhelming cancer data. That's coming from a closely watched conference called ESMO, based in Europe, but that's one of the worst performers on my screen. Again, down 40%, cancer, lung cancer and pancreatic cancer data, missing what Wall Street was looking for. Biggest move since that company went public.
All right, very good. Billy Lipschultz, thank you so much for joining us. Billy Lipschultz, he covers the markets for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. I want to get the latest from what is happening in Israel and that part of the world. Today, we're fortunate to be joined by Ambassador Alon Pincus, former Israel General Counsel in New York, former Chief of Staffs to two foreign ministers, so certainly well-versed in what is happening in that part of the world. Ambassador, thanks so much for joining us here. I guess over here in the U.S., we've seen lots of news reporting about massing of troops and materiel on the borders with Gaza. Can you give us the latest update of where the situation is today and how you think it might unfold over the next several days?
Well, thank you for having me to start with. Here's the story. There's been an amassing of, as you correctly pointed out, of ground troops, tanks, artillery, infantry, armored infantry, and so on and so forth, supported by attack helicopters and what have you. Mostly on the northern and eastern parts of the Gaza Strip. Now, everyone assumes that a ground operation, a large-scale ground operation, is therefore a foregone conclusion. So let me put three question marks next to that. First, there is the U.S. President Biden, Defense Secretary Lloyd Austin, and Secretary of State Antony Blinken, all three of which very politely but very adamantly warned Israel of the complications that will be inevitable if it so chooses to mount a massive ground operation. With Biden even going further and saying to Israel, gentlemen, ladies and gentlemen, with all due respect, you need to have an exit strategy. You need to have a political goal. What is your strategy here? What is your political goal? And I'm not sure that Israel has an answer for that. The second question mark pertains to the fate of 222 hostages, of which at least 33 are babies and or toddlers. A ground operation could endanger them. A ground operation could seal their fate in the most negative consequence, in the most negative of circumstances. So I don't know necessarily that a ground operation is conducive to secure their release. The third question mark is whether or not Israel has, and I don't know the answer to that, to be honest, whether or not Israel has sufficient and adequate intelligence, sufficient and adequate what we call a target bank. Who are you going to hit? Where are you going to hit it? With how much force committed to that objective. And you take all these three question marks and you understand why there has been an amassing of troops, but not yet a ground operation.
I wonder about the aid that's being delivered to Gaza. You know, the world media seems to be pressing for more, and apparently Gaza is about to run out of fuel. Israel continues to point out that, hey, when fuel trucks go over there, Hamas takes them right away. So they would essentially be delivering fuel directly to the enemy to fuel the war effort against them. How do they deal with that?
It's a major problem because that fuel is used for the generators, who are then used for the launching of the some of the rockets that Hamas and the Islamic Jihad, its sister organization, have.
Of course, they also need fuel to run desalination plants and hospitals, right?
Exactly. That was my second. On the other hand, that same fuel, which is a fungible commodity, is used for hospitals, is used for desalination, as you mentioned correctly. And so the idea is that only a limited number of convoys will go in, most through the southern tip of the Gaza Strip, which actually borders Egypt rather than Israel. But that the Red Cross, the UN, the Egyptians, and in some instances Israel, will monitor what's going in and who's receiving it. What happens once it crosses the border, the gate, the fence, whatever, and gets into Gaza, and as you mentioned, can be taken over by Hamas, is a problem. And that's part of this humanitarian crisis that is quietly but surely brewing in Gaza. So that's going to be a major issue. On top of which, President Biden himself has repeatedly asked that Israel allow for a continuous inflow of humanitarian aid, including that gasoline, including that fuel.
So, Ambassador, I mean, I'm just not sure what the catalyst is for a next step other than some significant breakthrough on the hostage front. What do you believe, or what are most observers, I guess, expecting over the next several days?
Well, okay, again, what is the political goal here? If the political goal is to eradicate Hamas, then practically Israel needs to take over the entire Gaza Strip, which is 2.2 million people in a very narrow and the densest, in fact, place on earth. So that's a problem. So what you should be looking in the next few days is whether or not Israel clarifies what its political end is, what the political objective is. If it is less than dismantling Hamas, then you will see a smaller scale ground operation. But bear in mind, and anyone who's listening to us should bear in mind that there are various kinds and various scopes of a ground operation. It could be small incursions by small units. It could be medium-sized incursions, in and out, go in, destroy, get out. And it could, in fact, be cutting the Gaza Strip in half, leaving the southern part, where most of the population is right now, intact, and fighting Hamas in the north. Now, there is another major consideration that we haven't even discussed yet, which deserves a completely different segment, obviously, and that is the likelihood of escalation. The more escalation, the more power, the more firepower is used in Gaza, the more likely it is that this will expand or spread into Lebanon, where Hezbollah, armed with nearly 100,000 much more precise rockets, and empowered, emboldened, and supported by Iran is. So this is a series of bad choices that need to be made.
So just 30 seconds left, Ambassador. What is the status with Lebanon right now?
Well, there's a ping pong of an exchange of fire going on for the last 96 hours, for the last 4 days. My biggest fear is that there will be an escalation as a result of a miscalculation. That someone will think that someone is planning something that the other side didn't really plan, and the response would be disproportionate, and that would entail a similar or equal disproportionate response. And before you know it, hell breaks loose.
Yep.
Right now, everyone is poking everyone, but it's not an escalatory yet. By the way, I know we're out of time. That's the reason why President Biden sent the Gerald Ford, the USS Gerald Ford.
The carrier group. Yep. Very good.
Carrier strike.
Ambassador, thank you so much for taking the time. Ambassador Alon Pinkas, former Israel General Counsel in New York. He was just coming to us from Tel Aviv. Right now, let's get some company news with Steve Rappaport.
All two oil giants have joined forces in the latest